Good morning, Zinger Nation. This is Justin Roberti, writer and producer with Benzinga, and we're happy to bring you another edition of Web3 and the Future of Finance. Today, we're going to be talking about in the crypto revolution. Today, we're going to be talking about the mainstreaming of crypto. It's been a wonderful year overall for it. We started out with the Bitcoin ETFs, quickly followed, or I should say, like kind of concurrently followed by the Ethereum ETFs. This is giving a lot of new investors who aren't necessarily in the Web3 space an opportunity to have exposure to Bitcoin and Ethereum. You can hear it, everyone, if you listen closely enough, ticking away toward the mainstreaming of crypto assets as just another form of assets. And that's kind of what the theme is today. What the combination of TradFi and blockchain working together can bring to the retail consumer, to the large organizations as well. What this is going to do for the little guy and what this is going to do for big banks. So a very cool day today. One thing that you've probably already caught, if you haven't seen the news about it, is of course in Hong Kong they have created their first spot Bitcoin and Ethereum ETFs. So we in just a minute are going to talk to Hashkey Capital about the fund that they've just launched. This is a great opportunity to hear a little bit about what's going on around the world. Then we've got great panels coming up on tokenization and on sort of a larger perspective on what mainstreaming looks like from a regulatory point of view in terms of like what's available to buy. It's going to be a fun show, lots of guests coming on. So if we are ready, we could just go ahead and bring Vivian on, I guess. Let's go ahead and start talking about their big launch today. Vivian, how are you?
Good morning. Good, a very busy day today. And good morning. This is Vivian Wong from the partner of Hashkey Capital. And thanks, Justin, for inviting us for this conversation.
Thanks for coming on. I can certainly imagine. I remember talking to Grayscale when they were launching their fund in the beginning of the year. It's been a long road getting here, hasn't it?
Yeah, we have almost spent a year time after we launched, Hong Kong launched the futures ETF last year. Then we started off to negotiate and have lobbying with SFC regarding on launching a spot ETF product. And then be thankful that they are very open up for this opportunity. And then they talk with us after several discussions, and we think that this is a good timing, especially our fund administrator, our local fund administrator, our custodians, and everyone's ready for this opportunity. So we're so happy today that we step one step forward to crypto, especially as you've just mentioned, it's a kind of Web3 crossover with Web2 opportunity here.
Right, absolutely. And the prevailing sentiment seems to be that in general, the average retail consumer investor or the average retail investor is more involved in crypto in Hong Kong than in the US. But it seems, the regulatory environment actually lagged behind a little bit in terms of approving the ETFs. What made putting an ETF wrapper around digital assets, kind of a complicated thing to get done in Hong Kong?
To be fair, I don't think this is a complicated thing. Sorry, there's an echo here. I don't think this is a complicated thing to work in Hong Kong right now. I understand that people think that in January time that SEC has approved that the crypto spot ETF, but then you see that currently let me make a little bit introduction about our ETF product. We have two products today. One is the Bitcoin ETF. The second one is the Ethereum ETF, which is kind of a pioneering product. And especially there's a particular function, which is an in-kind subscription, which this is the very first product in Hong Kong and also in the world. So I guess we are kind of trying to make sure that we are standing up as one of the progenitor of the industry as well.
But since there is a greater interest in crypto in Hong Kong than the U.S., is it making as a big difference? I mean, here in the U.S., it's pretty fair to say that crypto investors and crypto enthusiasts are in the minority among the population at large. There's a much larger percentage of people that are participating in Hong Kong. Is there greater mainstream acceptance there? And if so, what does the ETF mean to people? I mean, it's a way to be able to get exposure without entering Web3. Does that make as big a difference in Hong Kong's environment as it does here in the US?
I see. First of all, I guess if you are talking about crypto ETF 2 years ago or 1 year ago. In Hong Kong, I don't think it would exist. I would say that it's not going to exist until we got a clear instructions or clear like regulatory pathway. But right now, with all these sets, and we have been communicating with SFC for so long that we understand about the situation, that this is a thing which will help everyone in our industry and also in within the investor side. We've been talking with a lot of investors, whether talking about family office or retail investors, or we're talking about with high net worth individuals already during the past year. And then they has been very speculative, I would say, at that time. But recently, I would say that we talk with international players, international wealth management firms, Chinese wealth management firm in Hong Kong. They're so keen in launching our product to the shelf. So this is a major difference, I would say, in Hong Kong. And then you see the flow right now today. There's a lot of retail clients coming in. I was kind of surprised because for Hong Kong's ETF product, it was always from the institutional side first before it goes into a retail market. But for this time, it seems that the retail has been quite demanding regarding on this product. So we're kind of thankful for that as well. Regarding on the comparison, I wouldn't make a big comparison on that angle, but I would say that there is definitely a lot of attentions here, especially this particular vehicle, as I mentioned, can be doing an in-cash subscription, which welcomes up a lot of people from the crypto native areas, which they can do either way, subscribe into whether it's Bitcoin or Ethereum, and then redeem. They can just redeem back by Bitcoin or Ethereum, or they can sell it off in secondary market to cash. So I guess this provides a leeway, like I was like an OTC product to them. So in order to speed up every process, and there's a lot of, to be frank, there's a lot of people who are very wealthy person. They want to have a source of proof about their wealth. But then with Bitcoin or Ethereum, maybe you talk to the big fours, they will say that, probably we cannot do any like bookkeeping regarding on this product. But within ETF structure, it's kind of a well-structured products within the world already. So there's a lot of people recognize about this product, and then auditors are willing to accept this as a proof of the wealth as well.
Right. You know, I read an article this morning. Someone from HashKey was saying that you know, they're expecting maybe by the end of, I think it's this year, they're expecting the ETF market to reach 20% of the U.S. counterpart. Some people have pointed out that, you know, they felt it had kind of a lackluster start. You know, trading volume was around 100 million in comparison to 4.5 billion in the U.S. When it first launched. But then I also heard a lot of detractors say the same thing about the ETFs when they launched here in the U.S. Like they were kind of expecting everything to change all at once, and it was people get very, very high hopes, especially in the crypto world. I think it's one of our strengths, but it's also one of our weaknesses sometimes. You know, how do you feel about the trajectory of trading so far around the Bitcoin and Ethereum spot ETFs? And do you still hold by your firm's or you know, HashKey Capital's idea that the size of the investment ETFs might reach about 20% of what's being done in the U.S. by the end of the year?
I think I take a bit conservative approach. I would think there's something around like 10 to 15% to be conservative. But at the same time, I am kind of bullish about this product. So I understand that today's like trading volume wasn't that great as comparing to the US ETF products by first launch. Several reasons behind. The first thing is that Hong Kong market usually have a relatively sloppier like starting for the ETF products. So it needs a lot of education and a lot of momentum from retail investors in order to gather the attention and interest. So I guess there is a lot of work for me to do these days to educate them about this product, like what we have done in 10 or 15 years ago about derivative products when we started off. And I was from Barclays Global Investor before. So when they launched the very first ETF product, it's also suffering from a little bit of traction from the investors as well. So what I believe is that it will grow slowly, but at the very beginning for the first month, but then it will grow massively after 3 to 6 months time. So we've been also talking with a lot of crypto native person, we've talked with family offices. So this is a timeline which they are expecting to add the positions, whether you're talking about from 0 to 3%, or whether you're talking about from 1% to 5% of the portfolio.
Yeah, and you had mentioned that you have two products here. You've got your Ethereum fund as well as your Bitcoin fund, but you also have part of this that's aimed at a global and potentially US audience. Is that made easier by putting it within a TradFi ETF wrapper? And how is that going to work? If people are inspired by our conversation right now and want to participate, what do they do?
I guess immediately they have to ask the securities firm whether they can put it into shelf. I guess in Hong Kong or any other areas in the world, that there are some of the banks or investment banks, they are not willing to accept investing into blockchain or Web3 products. But I guess, as I mentioned just now, that there's a lot of major investment banks, international banks or retail banks, they are kind of asking us about the opportunity to make it into the shelf. So I really make a difference within this year time. I guess thankful that US opens up this opportunity. So everyone thinks that maybe we should put it on the shelf. And then Hong Kong takes the second step, which is launching the ETF product in Bitcoin and Ethereum, and a newly function with this in-kind subscription, which opens up with a lot of opportunities. Because I would describe that, say for instance, for a very crypto native person, then they would believe that, oh, why should I hold a securities account? I could definitely do something simpler by just utilizing my coins and investing into a traditional product. So I guess this really opens up to more like expanding our network, expanding our investor base.
Okay, excellent. So how do you expect to see this play out this year? It seems to me like after a protracted battle with the SEC, where it hasn't been very friendly to the crypto world. Gary Gensler hasn't been very friendly to the crypto world here in the U.S., from the opinion of a lot of people, including myself, over the past few years. We finally have managed to get this done. And now you have an opportunity to innovate, beyond something that's already been started. Of course, Europe had digital asset ETFs before us. That's worth mentioning. But do you think that this is picking up momentum in terms of global acceptance? And how do you see it playing out in 2024?
I would say that for this ETF product, especially, there's a lot of people already inquiring me about this product particularly. So I believe this is gaining tractions about like client interest. So I do not have a view regarding on US side, but for Hong Kong side or Asia side, we've been meeting a lot of distributors recently. I guess around 30 distributors, they claim, they mentioned to us that this is a management field that they have to allocate money into this bucket. So previously, they probably are very hesitate about putting this as one of their portfolio asset class. But right now, they are kind of open up. So I think this is something which takes a lot of opportunity for our investors. And then also, I just mentioned about education, that we're going to launch a lot of education programs to them that will give us more opportunity to showcase about how good is this product, and then what is the investment opportunity, and then kind of thematical approach, like they can do some arbitrage trading, and then some option trading, or kind of doing some leverage up in future.
Well, I think it's fantastic. I'll go ahead and close that. But well, that is great. Thank you so much for coming on and sharing this with us, sharing this this momentous day for Hashkey with us. Congratulations to your team. I imagine that you've gotten are your phones ringing off the hook with other funds asking you how to get on board with this digital asset thing?
Yeah, there's a couple of funds asking me actually how to launch this product. And then there's a lot of funds coming in asking us if there's opportunity to do this collaboration, because our collaboration currently is with a Chinese mega-size asset management house called Busara. So we've been doing, they are the investment manager and we are the sub-manager of this fund. So we're trying to demonstrate that this is a combination, a good collaboration between TradFi and we are from Web3. So we can gather around all these like crypto native and also TradFi investor together in order to make a bigger picture for the industry.
Well, Vivian, it's been a delight to meet you. Thank you so much for coming and sharing your big news with us, or dropping alpha, everyone, as we always like to say. It's good to touch base with the greater crypto community. I hope that in Hong Kong you come up with innovations that we can then implement over here too. It's all part of a greater picture of merging the TradFi and blockchain worlds. We really appreciate you coming today.
Thanks a lot, and definitely love to share different ideas between the two areas.
Yeah, thank you so much. Hopefully we'll talk again soon. All right, take care, Vivian. Thank you.
Thanks a lot. Bye.
All right, so that was actually pretty cool. I mean, we had the opportunity to have them come on. HashKey is really, in some ways is kind of the grayscale of Hong Kong. I don't know if that's a fair comparison or not, but they are definitely a dominant force in there. If you're doing a lot of your trading and following crypto stuff in the US, if you haven't heard about them, it's because, well, most of the news here tends to be US focused, but definitely very big institution that's been working on this for a while. And I'm excited to see it, folks. I mean, the more investors are able to get on board with Bitcoin, the more we incrementally step toward that global digital currency that we have all been hoping for. In the meantime, I'm going to go ahead and move over to an interview I did with Fred Thiel from Marathon Digital Holdings to talk a little bit about how the movements in Bitcoin are impacting mining. So if we could go ahead and cue that up, we'll just move over to that and kind of keep ourselves on our schedule. Thank you, everyone, for joining us today, by the way. Are we ready to go? Yeah, thank you so much for joining us. We're about to interview Fred Thiel, the CEO of Marathon Digital Holdings. So let's go ahead and bring Fred on. We'd like to talk to him a little bit about all of this business with Bitcoin lately. Good morning, Fred. How are you, sir?
I'm great, thank you. How are you?
Good. Thank you so much for coming on. It seems like Marathon Digital Holdings had an excellent week last week for its shareholders. Why don't you tell me a little bit about what happened?
I think it's a combination of announcements. We've announced our growth goal for this year and updated guidance. We had said previously we would be at about 35 exahash. We've now said we're going to be at 50, which is almost 100% growth over last year, right, which is great news. And then also, we've had some very good successes with some of our block wins, obviously. People have been looking at the Block Explorer. It's a great thing about this business. We're fully transparent. People can see our revenue as we generate it minute by minute. And, there were some great blocks just right after the halving with, 18 and 16 Bitcoin per block in transaction fees. So it was quite a great week.
Mm-hmm. Sure. And of course, the halving could impact fees directly, but it's also encouraged a lot more participation, hasn't it? It seems like the ETFs have also opened up Bitcoin exposure to billions of new potential investors without necessarily even having to participate in blockchain or in Web3 in any way, without having to have a digital wallet. Do you think that is the mainstreaming finally here? Are people finally coming to regard Bitcoin as digital assets in general as just another form of assets?
Well, I think a couple of things have happened. The ETFs being approved, and realize there were 11 ETFs that were approved, essentially provides one level of legitimization, which means the regulators now have a way that they believe is applicable for retail investors and institutional investors to buy, hold, and kind of trade Bitcoin, if you would. The ETFs, they believe, is a great vehicle for that because it allows them to control the on and off ramps, and it's a cash settled asset, which gives them a little bit more control as well. The real thing we're seeing with the ETFs is that it is still so early. The only real participants that have been buying and investing in the ETFs are predominantly still retail investors. The institutional investors have only just started dipping their toes in the water. I know Morgan Stanley has only recently said they're going to begin to train their RIAs on how to sell the ETFs. So we have yet to see the real rush. What we've essentially seen is retail enthusiasts, people who are aware of Bitcoin, people who already were comfortable with Bitcoin as an investment, dipping their toes in with the ETFs. But even with all that said, the ETFs, 4 of the Bitcoin ETFs were the 4 most successful ETF launches ever. And if you look at the total amount of assets under management, which is slightly over almost $60 billion of assets, that's about 60% of what gold has achieved in 20 years in the way of assets under management. So very successful ETF launch. Impact on the price of Bitcoin, it likely pulled forward some of the price appreciation we would normally see later in the cycle. But it's essentially created a daily demand of about 2,000 Bitcoin that needs to be found somewhere. And there are decreasing balances of Bitcoin on public exchanges. And you have to realize there's only about 2 million Bitcoin in circulating supply, generally available on exchanges today. So this is all bodes well for long-term demand. And the halving added a little bit of a supply shock where we decreased from 900 new Bitcoin issued a day to 450. And so that, together with the demand from ETFs, is providing some upward pricing pressure on Bitcoin, where historically after a halving, you would have seen a drop in the price of Bitcoin before a run-up happening.
It seems like the ETF wrapper would be more for traditional finance guys than necessarily, at least the crypto enthusiast type of retail investor, because it's something that it's an instrument that they've been familiar with for about 30 years. What do you think has been the reluctance for institutional involvement in Bitcoin and I think also Ethereum ETFs?
Well, I think Ethereum is still up in the air as to how the U.S. regulators are going to deal with it. The CFTC and the SEC are arguing about whether it's a commodity or a security. And at the end of the day, the ETFs are regulated by the SEC. But in regards to Bitcoin, if you look at the ETFs, what it effectively has done is taken the risk of you open an account on an exchange, your coins are commingled with other coins, potentially your cash is commingled with other cash. This is scary. Look what happened to FTX, etc.
Sure.
Now with the ETFs, you can call your broker, you can call Fidelity, you can call, wherever you happen to hold your equity investments and things like that. You can buy ETF shares. They're custodied by regulated third parties. There's a much higher degree of comfort and safety. What you have to realize, though, is that the ETF settled T+1, which means they're actually settling the day after you do the transaction. And so there can be slippage in the price of Bitcoin, meaning it can move up or down between when you bought a share in the ETF and when the ETF buys the underlying Bitcoin. And so you just need to be aware of those differences. But if you're like most savers who are putting a small percentage of their assets into Bitcoin every month or a handful of times a year, then that really doesn't matter. You're buying for and holding for the long haul. And by everybody's estimates and analysis, Bitcoin has outperformed almost any asset class, whether it's over the last year, last 5 years, last 10 years. So it's been a great asset to be in, and I think everybody should have some small portion of their savings in Bitcoin.
Do you think that it's taking the place of digital gold, as everyone's been saying, which has been viewed as a it's been a 10,000 year long-term investment after all. I mean, gold is, I mean to say, it's been in circulation as a currency, as a store of wealth and a means of exchange for about 10,000 years in human history. It's hard to look at any single thing that has a better track record or a more long-standing track record. Easy to see how Bitcoin has made more gains than gold. That seems like a cherry-picked argument in some ways. It doesn't have anywhere near the stability. Can we have purview into that, since we've only been monitoring it for about 14 and 15 years? Does it have anywhere near the stability to deserve that comparison, or does it just kind of remain a blue chip among crypto?
Well, remember that the volatility in an asset is what drives the returns, right? If the equity markets were not volatile, people wouldn't invest in them. Right? Bond markets provide that level of security, right? You know you're going to get a coupon payment every year for the principal that you paid for the bond. Equity markets are more you're betting on the risk and the return that you're going to get because of growth in the underlying equity. You invest in Bitcoin because you want growth in the value of the asset. You invest in gold because you don't want to lose money. There's a very different reason for investing in gold than investing in Bitcoin. But even so, a 2% allocation to Bitcoin, and there are many analysts who have done this. Fidelity has published papers on this as well. A 2% allocation to Bitcoin in your 60-40 portfolio provides a significant uplift to the returns you're getting with minimal downside. You know, a 2% drop in the value of your portfolio is totally affordable by the vast majority of investors. And when you look at that weight against the return, it absolutely makes sense. Gold is an asset that, interestingly enough, the supply isn't limited in the same sense that Bitcoin will only ever produce 21 million Bitcoin, and then that's it. Gold, you keep extracting it out of the ground. The emissions rate, meaning the rate at which new Bitcoin are released through the mining process, is now significantly lower than that of gold. So gold has a higher inflationary nature to it than Bitcoin does. Essentially, the gold miners are printing more gold.
Right.
But what we're seeing is longer term, for the same reason that Warren Buffett likes to invest in gold miners versus holding underlying gold. I think you're going to see that people will again start investing in Bitcoin miners now post-halving as a way to get that extra beta over just the spot price of Bitcoin. And I think the gold and Bitcoin are going to operate quite similarly in certain market conditions. In other market conditions, Bitcoin tends to correlate more with equities or a risk-on attitude. And both are very driven by monetary policy. So when there is loose money, more money can go into investments, more money tends to go into riskier investments like Bitcoin. When there is tight monetary policy, people tend to put their assets into cash or other things. And so I think what we're going to see over the next few years here is that a period of extended, what I would call high interest rates compared to what we've seen over the last 20 years. Inflation is likely not going to be at 2% anytime soon. I think we're going to continue to see inflation being very sticky and persistent, and that's going to delay the Fed's ability to do interest rate decreases. But at the same time, the economy is going to start slowing down. So I think the Fed's going to be in a very tough place. But if the monetary policy of who's ever in government next year is to print more money, add liquidity to the marketplace, reduce interest rates, et cetera, then I think you're going to see Bitcoin tear upwards because a lot of capital is going to flow that way.
Do you think that a bright future for Bitcoin is dependent upon a change of administration?
No, I think Bitcoin, listen, it's an asset class that is over $1 trillion. You now have millions and millions of people in the US who hold it and use it. The SEC has said that Bitcoin is a commodity. The fact that you have ETFs says a lot. And you now have sovereigns and governments starting to hold a small portion of their assets in Bitcoin. You have corporations like MicroStrategy and others putting Bitcoin on their balance sheet. So I think the horse is out of the barn on if they could try to prohibit it. It would almost be like going back to the 1930s when ownership of gold was prohibited because the federal government wanted people to invest in savings bonds. Don't think that's going to happen here. What I do think is going to happen is a clear distinction between Bitcoin and the overall crypto per se, stable coins, all these other altcoins, etc. Bitcoin is an asset class all to itself. It's a store of value. It's an accepted market, if you would, a market instrument that institutional investors can use for holding assets. There's plenty of liquidity in the marketplace, so you can start trading large volumes, large amounts of assets. And I think it's really here to stay. The other digital assets, time will tell. I think Ethereum still has to go through some major regulatory hurdles before that really gets greenlit to the same extent.
But overall, we're getting there. I mean, the SEC was an inconstant friend to the crypto world last year, to put it mildly. Hopefully, this year is a little bit less exciting than last year was. Of course, less Sam Bankman-Frieds and so forth will probably really help. I've noticed. First of all, it's worth noting that Marathon Digital, you're holding, if I'm not mistaken, over half of the mining capacity that we know about right now. Is that correct?
I clarify the question a little bit. Do you mean that our
I believe that through acquisition, you have over 50% of mining
yes.
capacity, while reducing operating costs. Tell me a little bit about that transition. What has the strategy been there?
So we started the business around an asset light strategy. The purpose of this was you want to scale as quickly as you can because scale gets you revenue and profitability, cash flow, and an ability to raise capital, which lets you continue to scale. If you look at your typical Bitcoin mining site, there's infrastructure that has to go in, and then you have the Bitcoin mining rigs. And so about 30% of the assets that would be invested would go to, of the CapEx would go to infrastructure, 70% to miners. We basically said, we are going to allow other people to make the investment in infrastructure. We'll host our miners with them, just like you would at a co-location facility for data centers. And then we're going to put every dollar we have into miners so we can scale faster than anybody else, which we did, and we became the biggest miner in the world. Now what we're doing is we're consolidating the sites where we currently have capacity, where our miners are running, by buying them. And we're able to buy them now at a price that is less than it would have cost us to build them. And so we're going from an asset light strategy to a portfolio approach. And in December, we owned about 3% of our capacity. Today, we own about 54% of our capacity, meaning the infrastructure that our capacity runs on. And by the end of this year, it'll be a greater percentage than that as well. So as we continue to grow, it'll be predominantly an owned and operated capacity.
And of course, miners are constantly hedging against and having to manage the cost of energy and of materials in order to make mining profitable. Marathon has made a push to reduce emissions and find cleaner energy. Is that a matter of good PR, or is that a matter of good business sense?
Well, it's good business sense. Here's the reason why. Today, we're at about 56% of renewable energy that we use. Using stranded renewable energy, so solar farms, wind farms, et cetera, old hydro dams, where today they can't sell the power because either they don't have interconnect or there's congestion on the network, the grid network. Think of it as there's more water trying to get through the pipes to the end consumers than the pipes can handle, and so it backs up at the generation side. Well, that's power that those generators can't sell. And especially with renewable energy, wind and solar, it's zero marginal cost to produce a kilowatt of electricity. And so if they can't sell that energy, it's lost revenue. They have no cost associated to it. So if they can sell it at some cost to us, then we can use that energy. And over the years, as they eventually get an interconnect, then we'll move our miners to another site. And so it's becoming attractive for us to now look at owning actual potential, mature solar and wind sites, because it would be a way for us to control and own our own power.
Right. Perfect. So just to wrap it up, 2024, even coming into it, ETFs approved very early in Q1. The halving, of course, just happened as we all expected. These tend to be bullish signs for Bitcoin. Are more people looking at exposure not only to Bitcoin, but to Bitcoin mining investments? And how do you, without this being financial advice, ladies and gentlemen, because it is not, of course, what do you see playing out throughout the rest of 2024?
Well, I think what you're going to see is AI and Bitcoin mining competing in the capital markets and in the energy markets for capacity. Obviously, this explosion in AI is causing a huge hunt for compute capacity, which requires power. And so now the AI industry is out trying to do what the Bitcoin miners are doing. But there's one very significant difference in that. Bitcoin miners can shed load. They can shut off their systems at any time and give that load back to the grid. AI doesn't have that flexibility. It needs to keep churning away. And so I think what you're going to see is people are going to be viewing Bitcoin miners that have access to good stranded energy and have good energy policies about how they manage their energy are going to outperform Bitcoin miners that are just focused on lowest possible cost. The other thing that's going to be very important is diversification, both geographically and industry-wise. So we operate on 3 continents, 11 different sites. That gives us great diversity from regime, risk, taxation, regulation, all of those things. It also gives us a better palette, if you would, of energy offerings that we can use. Additionally, we're doing things around energy harvesting, where we're taking waste material, methane, and or biomass from like landfills and other places, turning that into energy and turning that energy into heat, which we can then feed back into an industrial process. Notice I didn't say Bitcoin mining. Bitcoin mining is what generates the heat, though. And so if we essentially can get paid to generate heat and we can get paid to process biomass and methane, then we mine Bitcoin at no cost.
Right. All right. Well, excellent. Thank you so much for taking the time to speak with me today, Fred. It's been great talking to you, and we look forward to finding out how things are going to work out in mining for 2024. It certainly is an exciting time.
Great. Thanks for having me.
Great. Thank you very much. Take care. Hey there. This is Justin Roberti coming right back at you. We're going to see if we're going to bring Armando on with us as well. Armando, welcome.
How's it going?
There. We got it. Perfect. Adjusting your lens footage. How you doing, man?
I'm good. And you?
Good. Armando is going to come on and co-host the next couple of panel discussions with me, everyone. Why don't you just quickly, Armando, you're an investor, you're an influencer. Why don't you give us a quick rundown, give us your elevator pitch?
Yeah, so basically I started off as a software engineer. 2010, I went back to grad school to study cryptology. I got in early in Bitcoin because I was studying the security mechanism that backs up cryptocurrency. So I got in early. I was an early adopter of Bitcoin. 2015, 16, I created a website called ICO Ranker. It ended up being the 3rd biggest site in the world for traffic coming through cryptocurrency back in the ICO craze. We ended up selling that to a publicly traded company. After that, it hit the news. A lot of people started asking me questions about crypto, and I kind of evolved into what you said as being a crypto influencer and thought leader. So that's where we're at today, and I'm happy to be here.
Okay, great. Well, it's good to have you here, Armando. We're about to bring out 3 great guests. We've got Zach Pandel from Grayscale, Joey Garcia from Zappo Bank, and Kyle DeCruz from Van Eck. So let's go ahead and bring them out. We're going to talk a little bit about what this 10,000 view looks like. If we get Armando back out here too, that'd be great.
Okay. Should he be back?
There we go. All right. Okay, we just lost him for a second. I guess it was just shuffling. Hello, gentlemen. Thank you for joining us today. How are you?
Great. It's good to be here.
Good to see you, Justin.
So how does everybody feel about the news coming out of Hong Kong? Is this a big deal to our people? Is it a good sign, globally to be having Hong Kong, which has, despite its cultural embracing of crypto, has at times been more conservative in regulation. Now we have ETFs for spot ETFs for Bitcoin and for Ethereum. Is that a good sign for mainstreaming overall? Is this a continuation of what happened here in the U.S. with the launch of ETFs at the beginning of the year? What do you think? We'll go over to you, Joey.
Look, it's fascinating, isn't it? When you look at the marketplace in that part of the world, Hong Kong have to an extent been on certain sort of catch up. Lots of domiciles in the world are looking to establish themselves as sort of key focal sort of players in certain regions. Hong Kong, going back a while, started to restrict sort of access to crypto-related trading platforms only to professional investors. Did that go well? Not really. Singapore took the massive steps forward. They've gone all the way through to the banking layers with DBS, effectively offering trading platforms for institutional professional investors. So there's been a bit of a kind of quasi catch up and acceleration. So the law that came into place, last year has been very interesting. They've loosened a lot of the gaps, and this is a natural next step for them. They want to be a relevant marketplace in the globe. So I see it as a very sort of natural extension, fast forward-esque to what they're trying to do. as establishing themselves as a hub in the region. So I see it as a big positive.
Well, what do you think, Zach? Is this a continuation of something that, well, I mean, we followed the drama all last year. I wrote about it all last year for the past several years in terms of trying to get digital asset ETFs approved here in the US. Of course, Europe already has them. But is this a continuation of that same movement? Are we seeing the very face of mainstreaming happening before our eyes right now?
I think so. And Justin, I would draw an even longer timeline. There's been this long journey on Bitcoin coming to the center of the financial system, the first exchanges, the first derivative products, the first loans backed by Bitcoin collateral. Exchange traded products in the US are just one milestone in that journey. Exchange traded products in Hong Kong, another important milestone. But you're seeing improving access to these products as the crypto marketplace matures, as a broader range of investors understand the value of these assets in their portfolios. I think it's a positive sign. I think it's something that we'll see continue in other regions across a broader range of products. Again, on a long timeline that this industry has been on for more than a decade.
Right, definitely. What do you think, Kyle? Are we watching kind of the continuation of the same sort of long-term trend? Are we working toward that day where digital assets are just another part of your overall assets? As essentially, where you allocate your high-risk investments.
Yeah, absolutely. I mean, I think, interestingly, I was a little shocked that there's any countries left that haven't offered Bitcoin ETFs, because I thought the US might be the last, considering how long it took us to get here.
Right.
But I do think the US is sort of the bell cow, obviously. And I think that was a big notice to the rest of the world. We obviously already have them in North America and Canada. Many South American countries have them, Europe, et cetera, so on and so forth. I do think, to Zach's point, it's another big step forward. I think we're starting to see clients look at this asset class, and the more that have access to it in an ETF and a regulated type wrapper, I think a lot more folks take it seriously as an investable asset and see it belonging in their portfolios alongside, say, gold or other assets.
Yeah, I just to jump in, Justin, just listening to Kyle talk, it's so interesting, isn't it? Because if you think about the history of BTC, or look at the price history, or whatever you like, go back 5-10 years or whatever it was, and I might have decided to expose myself with $100, $500, $1,000 to unit value. You believe in this ecosystem and principle, but how you held that asset didn't really matter that much. It's sort of like carrying around $100 in your wallet, not that big a deal. But as the price starts to move, as the market starts to move, people want like much more security around the way that they expose themselves to that, whether it's through the Grayscale platform, whether it's through a proper regulated infrastructure, and from my point of view, obviously wearing a Zappo hat, whether it's through an actual banking infrastructure that provides exposure to an asset in a very, very secure way. Are we still going to be here at a 250K BTC price with people having ledger devices under their mattresses at home? Not really convinced. So I think it's a very natural kind of development of the, call it, professionalization of the whole industry.
Well, it seems like there were two parts to that story, right? There was an incredible buildup with a whole lot of bullishness, even at the end of last year, or your Q4 and 2023, because the ETFs were considered imminent, and then an immediate disappointment as soon as they launched, with people saying, "Oh, people haven't gotten involved enough. It's not going to pick up the price like we want it to." There are some pundits out there that want it to wanted it to go up to 250. I know Tim Draper, for example, was talking about 250 for this year. Joey, since you are on the banking side, of course, Zappo also deals in digital assets. Where is there a reluctance from institutional investors and really the really big money, the money that hasn't necessarily gotten involved in crypto up to this point in any meaningful way? Is there a reluctance for them to get into the pool with these ETFs and in general? And if so, where is that coming from? Or is that just our perception?
No, I don't think there's a reluctance at all. I'd say it's the complete opposite. I mean, let's talk about exposure to ETFs. I mean, both Kyle and Zach will know much better than me. The SEC's sort of postponed decision to approve sort of options trading on the spot Bitcoin ETFs. That will have a massive opening to an entire new market. You're talking about funds. You're talking about the proper institutional trading platforms. I mean, the options universe is very, very different to a direct sort of exposure to a price. And then from my point of view, absolutely. So I'll go back 5-8 years where I would sit and speak with correspondent banks, and I would talk to all these different platforms around Bitcoin, and I'd try and comfort them with data analytics and chain analysis reports on transaction monitoring, and they would look at me like I was crazy. Now it's a bit the opposite. Now large family offices, funds to an extent, there's quite a big developing market. They're all interested. So they're not, putting 50% of their assets and exposing it to BTC, but they all want to understand what's going on. And I'd say that's a huge, looking at the counterparts and the way to do that correctly in a secure way. You mentioned, Justin, before FTX, I always use the crazy example, would you get on a plane with a pilot that didn't have a pilot's license? You probably wouldn't. You wouldn't put your family on that plane. You wouldn't want to fly around the world. And having exposure to a virtual asset market through, a group of young guys who think they're really cool and are going to set up a trading platform and massively leverage and enter into gigantic conflicts and not understand what segregation of asset means is not a good idea. So we picture a very different story. Again, wearing a Zappa hat, we've been doing this since 2013 with the biggest Bitcoin custodian in the world, extremely secure, the Fort Knox of BTC. Back then, it was interesting. Now it's like, okay, if I want to understand this market, I want to do it in a very specific way. And I'd say that, so to answer your question, there's a lot more interest today in the market than there was all those years ago. That's my view, but I don't know what everyone else thinks.
Right. In terms of Kyle, I'll go over to you and then go back over to Zach. Since Van Eck obviously is involved in helping to do the fundraising for lots of Web3 projects, blockchain projects out there, what is your take on the sort of the temperature of the retail investor in the crypto space? There are things just inherently about these ETFs that are not pleasing to those who hold the credo of not my keys, not my crypto, right? Like you're gaining exposure to Bitcoin. You're not necessarily getting Bitcoin, not in the strictest sense of the word. Has there been a reluctance on that side to be involved? And if so, will the degens get over it and finally get on board with that, you think, after this year?
Yeah, you know what I think? I think it's sort of two different audiences, not unlike what happened with gold, right? When gold ETFs came about, there are gold bugs that want to bury their bullion in their backyard. There are folks that want to hold their Bitcoin. I have some Bitcoin that I self-custody as well. But there's a large swath of the market that's just never going to be interested. They understand the reason why, but they don't want to deal with the operational complexities or the operational risk that they lose their private keys. And that's a large portion of the market. So I think these ETFs are really the best way for them to get exposure. Frankly, a lot of the new ETF flows we've seen, all of us on this panel have seen, have come from these new clients who perhaps have always accessed Bitcoin on their apps like Coinbase and others, but perhaps did not want to get exposure that way due to perhaps their fear of the operational complexities.
Mm-hmm. Right. Zach, of course, right before this show, serendipitously, I guess this must be why we planned it for April 30th. Aside from the fact this is my birthday, it's also my birthday today. Thank you. Thank you very much. It's good to be old. They also handed down a sentence for CZ. I mean, we've got a little bit of mixed signals going on here right now. I can see with equal, I can see how some people invested in the crypto space who are crypto enthusiasts essentially and retail investors, being upset about losing some of the sphere that they're in right now. Is that the direction that we're ultimately going? Are we moving toward this just being another asset class among many asset classes? And what does that do to kind of crypto first funds like Grayscale? Like what do you think that pivot ends up looking like? Like maybe Zoomers 10 years from now won't be differentiating between, I don't know, GameStop stock and Ethereum or whatever.
I think that's exactly right, that we will get to a future in which digital assets are just assets, and public blockchains are just the infrastructure that runs many of the services that we consume online. But we're just at the very beginning of that story. And Bitcoin is a macro asset, an alternative money system that competes with the US dollar. The US dollar is strong today,
Right.
and we haven't even gotten to very far into that journey. I think the dollar will depreciate substantially over the next, say, 10 years, and that will be a major macro tailwind for Bitcoin. And all the rest of the things that are happening in public blockchain technology, decentralized applications and the use of smart contracts, tokenization is a buzzword that people are becoming more familiar with. These are just at their very early stages as well. So yes, I hope and expect that 10, 20, 30 years into the future, these distinctions aren't as important as they are today. But I just emphasize that we're still extremely early, even for Bitcoin, even for an asset that is valued more than $1 trillion, that has been around for 15 years. I still think even in Bitcoin's case, we are at the early stages of this journey. So Grayscale is delighted to be entirely focused on digital assets and along for that ride.
Right.
I think, and just listening, if I might add something, Justin, like I completely understand and agree with Zach's points, but it's interesting when you talk about the US or people talk about, concerns around USD, as a sort of, let's call it global network, the Fed is right up there at the top of the pile. If you start to talk about Argentina, you start talking about inflation rates at 150%, you talk to them about Bitcoin price volatility and they'll laugh in your face because the base currency volatility is absolutely off the chart. So as a core principle and asset, what it represents, something that is not externally controlled, something that is open, immutable, etc., all its sort of core functions, that has massive demand in many regions of the world today, and those markets are also evolving, and people are gaining access to that price exposure in different ways or wanting direct access, etc. So I do see it all as part of a natural evolution. And I'll say one other thing, which is you're either going to believe in this or not. Our chairman, we were with our chairman last week, Wences, very, very well-known guy in the space, and he told us a story which is just incredible. I forget, or wasn't really aware. Going back to 2004, I think it was, he mentioned the sort of the listing of both eBay and Amazon. The valuation of eBay at the time was around $80 billion. Amazon was around 25. So at the time, there were massive pressure points on Jeff Bezos and all these guys to open up call centers. So from a strategic and technical and data analysis perspective, made a lot of sense. Open massive call centers, address things, but he didn't believe in that. And he wanted this to be an internet-based business, and he believed in that technology and that future, et cetera, et cetera, et cetera. Open peer-to-peer pricing networks with eBay, fascinating, but that's what his core belief was. And look where we are today. That Amazon is a multi-trillion-dollar business. eBay is back down around 20 billion, I think, or so. And it's the same thing when you talk about the Bitcoin network and what it is, what it represents. Forget about short-term price volatility. You either believe in it or not. And there are lots of different people sits on different side of the fence, but I think the eBay Amazon example is a good one. Not to say that everything is going to turn out that way or anything, but yeah.
What other signs of mainstreaming of digital assets should we be looking for, Joey? I mean, I'll start with you on this partially because I think Zappo is one such sign. I think more partnerships between literal banks and exchanges, for example, or funds, in order to handle regulation is one example. But where else do you see this happening? For one thing, I can imagine that you guys, as soon as you made that move into incorporating Bitcoin, you probably got called by all of your peers about how exactly you did that and that sort of thing. So that always seems to happen.
Yeah, I mean, but we're a Bitcoin business that has merged into a bank, not the other way around. We're not a bank that has merged into a Bitcoin business. So we are, core Bitcoiners and core Bitcoin believers. But yeah, finding the transition between the financial services and the VASP or virtual asset universe is really complex. And interestingly, there are lots of people at the moment, banks around the world. I can't give you all of the US examples, but definitely HSBC, definitely JPM Chase, definitely Barclays, big brand names. They're really restricting payment rails between the virtual asset space and the crypto space, and we're going like the diametric opposite of that. So we have, we'll have US, whatever Swift and ACH rails and SEPA rails for the euro and FPS for GBP, but we've built blockchain-based native transaction rails, USDC in and out of your bank account. So we're forever pushing the merger of the two worlds, but always at the highest possible standard. So and that's the key. If you can understand and operate to that standard, that you can create a secure environment, a secure ecosystem that people can trust, etc. That's what I think. And then if you talk about, because we're talking about so many things, but Bitcoin, in the olden days of the internet, and people talk about whatever TCP/IP is like the language of the internet, what's the language of the blockchain going to be in the future? I'm not saying that Bitcoin will rule everything, but it is interesting to see the Lightning Network develop. It is interesting to look at the L2s, Rootstock Labs, and all of these guys building entire new functional layers. BitVM, now BitVMX. There's a lot of stuff developing on that market as well. So it's incredibly interesting and useful. Plus, we've got the authorities, right? So the authorities are looking at this in very, very different ways. They get very nervous about DeFi, very, very nervous about DeFi in lots of different ways.
Yeah, a little bit here in the U.S. Yeah, they keep
they keep you
putting
busy.
people in front of Congress.
Yeah. But you've got to manage that risk. You can't. If you have proper systems to allow someone an exposure to a DeFi related access or yield, whilst you can show the authority how you're managing that risk, that is how we will get there. If we don't do that, and the DeFi ecosystem thinks that it's just going to, free the world and regulators don't exist and everything will be fine, we'll be in like the ICO 2.0 universe of things, just saying, guys, this is not how. You have to have that conversation. You have to have that open discussion with the authorities. You can listen to their risks and you can address them in very specific and clever ways. I think that's how things should progress.
Right. A great answer. Kyle, I've been doing this for about 10 years, and I've been hearing for, even going back then, I remember saying things a lot, like in 2017 or whatever, saying things along the lines of, mainstreaming will be possible when we stop using all the, we stop talking about blockchain, we stop talking about, and often it boils down to payment rails, like Joey's talking about, which are so important. When I talk to GameFi projects or SocialFi projects, anything that wants to reach a mass audience, they're talking about how to streamline and make that easier for people. Where do you think, besides ETFs, because I'm very fond of talking about them, I keep going back to them, but besides the ETFs, where do you see the mainstreaming at play now? Where do you think the next big groundswell of it, getting normies outside the space using crypto, whether they know it or not? Where do you think that next move is going to happen?
Yeah, I think there's two. And to Joey's point earlier, I mean, ex-US, it's a very different situation than in US. Ex-US, I think that if you look at the number of transactions of the Bitcoin blockchain, a lot of them happen ex-US. It's because a lot of countries understand the importance of having a currency that's stable, that can be transferred around. It's a harder proposal to talk about Bitcoin store of value in the US as opposed to countries like he references, Argentina, Venezuela, et cetera, so on and so forth. I think when we think globally, and particularly in the US, we've got to get to a point where there's a killer app that's based on this technology, these blockchain rails, but the end user may not necessarily know that unless they're investigating that. That ultimately is where you get to mass adoption. I think the terminology is not something we have to hide. Bitcoin terminology or crypto terminology is what it is, HODL. it means something in crypto. It's hold on for dear life or hold. But we need to educate clients, investors, etc., on the analogies to what we're used to using. So HODL is just buy and hold investing. That's essentially all it means. So I think it's time, it's education, and then a killer app based on blockchain rails.
Right. What do you think, Zach? Will we have a price stability that allows Bitcoin to actually achieve its mission at any point? Like, is it always going to be or at least in the near future, in the foreseeable future, is it going to remain, the portion that you put into the high risk part of your portfolio, the part you can afford to lose, or are we going to be able to move beyond that to have it be something that's a blue chip by more general standards, not just a blue chip by crypto standards?
I would argue that we are at that place today. Bitcoin is a more than $1 trillion asset. It has a volatility of 40 to 50%. That puts it exactly in the middle of the magnificent 7 tech stocks in the United States, for example. Yeah. A little bit higher volatility than Google, a little bit lower volatility than Tesla. Bitcoin is a major asset. It's no longer a 200, 300 volatility or standard deviation asset that is, there's a kind of questionable future. I think that we've come a long way in 15 years, that Bitcoin has established itself as the digital alternative to gold, something that will be held by, and is already held by, many institutions. The ETFs will unlock that further. I think that we will see Bitcoin held by nation states in the same way that they hold gold, as a store of value asset, as a contingency asset alongside a portfolio of currencies. Bitcoin serves that purpose well today. We see a flowering of other use cases on top of Bitcoin, but I think it serves that purpose today. In terms of stable value and to the adoption point that you're talking about, we have something else for that in crypto, which I think is the clearest real world adoption trend today, and that's stable coins for payments.
Sure.
Stable coin payments on blockchain rails are instant, they're transparent, they're trustless, they're borderless. I have no doubt that in 10 years' time, if I send you a payment, we're not going to be going from my checking account at a commercial bank to your checking account at a commercial bank and waiting for the check to clear over a couple of days. I'm going to send you a tokenized version of cash right from my wallet to yours. And we see that taking off in pockets of the world, mostly in developing economies where the existing financial infrastructure is weaker and when the need is greater for a better system. But I think that these things will be coming to developed market economies like the US and Western Europe before too long. So Bitcoin serves its purpose well. I think it has already achieved status as a digital store of value, and it's not going away. And we have other technologies based on blockchain rails that can be used for stable payments, and those are taking off today as well. So I think it's straightforward to see for anyone that takes the time to look at it. I just say regulators see this too. That's why we see stablecoin legislation moving ahead in the United States, is that anyone that takes a look can see that this is a real business, there's real economic activity happening here today, and it's something that regulators need to take seriously.
Yeah,
Right.
and they do in the US. I was part of the Libra DM initiative. I was a Zappa representative there, and it's one of the things I would moan about a lot. You had a serious group of people. Everyone can say what they might, positives and negatives. I mean, an unbelievably professional group of people looking to build an extremely secure network of, I'm just going to call it USD for now. There's a long story behind that. But, whilst we've faced global opposition, whilst the European framework started to develop this concept of an EMT and a significant class and et cetera, whilst all of that was happening, whilst the law was moving so slowly, whilst the authorities were moving so slowly, the other guys, the Tethers of the world, were seeing absolutely massive numbers escalating. And that's one of the issues. Authorities and regulatory authorities and legislative policymakers, they move too slowly in an environment of an unbelievably fast moving technology, and it does create issues. We were talking about Bitcoin as a secure storage of value. Justin, there are lots of small cap virtual assets in the world. Massive market abuse, massive market manipulation around pricing and all of that stuff. So authorities get nervous. They get nervous about the whole thing. They don't know really how to distinguish one asset class from another. So having them on board and showing them a constructive approach to dealing with things, and regulation at the right standard, at the right level, is definitely the way for the ecosystem to grow for everyone. That's my view anyway.
Well, it's been fantastic having such an illustrious panel. Honestly, it's great to have the three of you. We're going to have to keep moving so I can get the other panel in. We're a few minutes behind for it now. But thank you so much for coming and sharing your thoughts today. Let's do one last thing before we go. None of this is financial advice, folks at home. None of it's financial advice. But just off the top of your dome, if you can, something you're excited about in the Web3 or blockchain space, digital asset space in 2024. Bonus points if it's not specifically a product or offering of your company. What about you, Zach? What are you stoked about for 2024?
It's so many things, but maybe I'll say ordinals, the kind of development of the ecosystem on top of Bitcoin. And I love the digital art and NFT space. It's awesome to see that coming to Bitcoin. So I'll say that for here.
I agree with that. I want to do some more stuff on ordinals. What about you, Kyle?
I think DePIN, or decentralized physical infrastructure. So I think tying the blockchain to real world use cases, and actually I think it's an easy onboarding for clients because they understand the real world use case of their compute power or what have you, and then tying that back to the blockchain infrastructure.
Okay, very cool. Yeah, that's a great example. What about you, Joey?
I'm going to keep it simple, aligned with Zach and Kyle, but the development and growth of the Bitcoin network. That's it. Many, many different ways that you can angle that, but that's what I'm most excited about.
I am too. I'm a huge fan, honestly. I'm a huge fan of Bitcoin, and very excited to see where it's developing. Thank you, gentlemen, for all the good work you're doing out there. Thank you for coming and talking to us today. We really appreciate it.
Thank you, Justin. Happy birthday.
Thank you.
Ciao.
All right. So I'm a year older. Let's see. Is Armando going to come out with me, and then we'll try this again? Are we good? How you doing, Armando? Can I hear you? Can't hear you. Don't have audio. Oh man, I'm sorry.
Look good this time.
Yeah, you sound good. You sound good. Absolutely. We're going to go ahead and bring out our next panel. We are doing this panel on tokenization. We've got Chintai, STO Market, and Securitize coming out. Are we all set up? Are you ready to go, Armando?
Yeah, I'm ready. Everything's good.
Okay, good. All right. So why don't we move Armando over to the side, or however you guys want to say it. It's fine. All right. So, hey, guys, gentlemen, welcome. Thank you for joining us today. We've got David Packman, CEO of Chintai, Reed Simon, head of credit for Securitize, and Jason Barraza, COO for STO Markets. Hello, gentlemen. How are you today?
Yeah, very well, thanks.
Doing great. Thanks for having us.
Yeah, thanks so much for coming on. It's been an exciting show. I imagine, David, have you been following what was happening in with the ETFs in Hong Kong? I thought that was kind of interesting. I mean, I was kind of surprised that Hong Kong didn't already have Bitcoin ETFs before today, honestly. But apparently,
the only thing I really followed, Justin, was I heard there's been a net outflow today, but that really shouldn't shock anybody who understands ETFs, and that with a falling price, that would be what you would expect to see somewhat, right, as they would have positioned it at the current price prior. I sort of agree with you, but I think it does reflect partly the nature of the industry, where we've seen mostly political driven resistance to allowing exposure to Bitcoin as an asset class for obviously many, many years. What we're really seeing here is just the normalization of that and that being added to portfolios, which I think is a tremendous thing for the whole industry.
Right, definitely. So, let's just start out simple here, and then I'll hand it over to Armando. What do we see, going over to you, Reed? What do we see as the biggest opportunity in tokenization right now? There are really two facets of this, right? Like on the one hand, we've got traditional assets that were hitherto unavailable to most investors that we can make available to a wider range of investors. And then we've also got the ability to tokenize and fractionalize the sale of things that were previously not able to do, like commercial real estate, for example. So what do you see as kind of the biggest example this year, the thing that you're kind of stoked about?
Sure. So, I mean, I think everyone on this panel would agree that the utility of bringing assets that are off-chain on-chain is huge.
Right.
And so the thing I'm most excited about is bringing yields on-chain that are not driven by supply and demand related to kind of crypto dynamics, but fixed income exists for the reliability of the yield it brings, and bringing yields that are off-chain unrelated to on-chain dynamics as a reliable form of yield is one thing I think tokenization can really offer.
Mm-hmm. Definitely. What do you think, Jason? What are you feeling more bullish about? Is it RWAs as well?
Yeah, I mean, bringing on real-world assets, traditional finance onto the blockchain has so many benefits, right? So it depends on really what your goal is. Is it access to markets you previously didn't have? Or if you're an institution, are you looking to save cash and save money on operations, right? Now, there's one thing to take really into consideration is, am I taking a token that represents an off-chain asset, which, again, does allow for a little bit more easily be able to trade? But what about the rest of the life cycle? And I think that's really what the opportunity is here for a lot of the institutions. How do we get the full life cycle of an asset on chain? And that's what we're referring to as digitally native or blockchain native assets. I think that's a great opportunity coming up. We're starting to see it more and more. And I think by the end of the year, we'll see a lot more people, dip their feet into the water here.
Right. And I imagine, David, that you would concur. I know that Chintai is, what is it, $1.2 billion worth of assets you bring onto Sol right now. I think that was one of your latest announcements. So I imagine you're pretty bullish on RWAs. What do you see as the really big opportunity right now?
Yeah, no, I do. I completely echo Jason's point about full trade life cycle moving on chain. So if you want to call it that, exactly, native being the big prize here. Tokenization of something and simply dumping it on a chain is something we've done as an industry a number of times over many years, but that doesn't really fundamentally change a lot or realize the true potential of this. So I do think I very much agree that the year ahead is very much one of a multitude of pilot projects, typically in the 5 to 100 mil type level range, where really as an industry, we're not going to be just proving that we can carry out tokenization on a chain. We're going to be showing that we can add some real benefits for the industry, whether it's on the cost and efficiency level, allocations, distribution, access to liquidity in a variety of ways that maybe have not been so prevalent before. All of that will translate into these deals filling out successfully. And then really to a large degree after that, the question for the wider financial system is why not use this technology, and it becomes increasingly difficult for them to answer that if it's done successfully. We're definitely bullish. We're finding actually, and I had a good chat with somebody on a call prior to this where they said, I'm imagining your problem is not finding enough customers anymore. It's actually the buyers on the other side, and I think as an industry, that's why we're looking to work with so many partners. Both in TradFi and other partners in this space, because filling out a deal flow is probably arguably the big challenge for the RWA sector in the year ahead, which is making sure we've got the right buyers lined up for these types of deals.
Definitely. Armando, are you ready with the next question? I'll hand off to you.
So I hope you guys can hear me. I had problems with my mic earlier. Tokenization is working in a lot of big ways, right? Especially with bringing, like we talked about earlier, bringing real world assets on chain. One of the biggest things that interests me is the alternatives, right? The art, they even put wine right now. There's tokenizing wine and precious metals. What do you guys feel about that in the future? Let's start with Jason.
Yeah, we've covered it a number of times on the Security Token Show in our newsletter, and I think it's a great use case, right? Wine. I know Oasis Pro, for example, is doing a wine fund tokenization, and so they started, announcing hey, this is how wine has performed against traditional assets, right? So it's a great way to diversify your portfolio. But from portfolio management perspective, it is traditionally pretty hard to get into these alternative assets, not to mention be able to rebalance those portfolios accordingly as markets change or as your needs change. So I think tokenization, of course, liquidity pending, will be able to increase that and make that a little bit more efficient of a process. I think it's great. I can't wait to have even more alternatives come on chain.
Yeah, I think it's going to bring a lot of what we call regular people into this market, because a lot of these assets are far outside of the reach of the average man. So what do you think about that, Reed?
Sure. I mean, I think there's a big delineation between, you have securities as real world assets, and then you have real world assets that are otherwise non-securities. And so I think all of the same challenges in kind of the TradFi markets around allowing your mom and pop access to some of these products still exists, and I think they're even more so compounded in bringing them on chain. But that's kind of one of the focuses at Securitize, is to be able to build out an ecosystem around securities that are digital assets to enable broader access. So that can be through financial engineering of credit products. It can be finding base assets in that space that crypto companies can then build upon, but still can look through to the transparency of kind of the underlying asset.
Yeah, I have one more question. So tokenization, like we said, is really doing a lot of great things. It's proliferating a lot of things like liquidity funds, right? Liquidity funds, I know that BlackRock has one. I know that Franklin Templeton has one out. How do you guys feel about the future of that on chain? David?
Yeah. So, go ahead, David.
Go ahead. You can go ahead. Go ahead. I think we lost him. Go ahead, Reed.
I think, David, you with us? Yeah, you went mute there. Maybe your headphones. Okay, let's go over to Reed, and we'll come back to you, David. I can't hear you right now.
Sure. So today we actually just crossed over 375 million on BUIDL, which is a token that is issued through the Securitize platform, managed by BlackRock. It mirrors their Fed funds, sort of like a money market fund. So 90-day and less treasuries, overnight repos, and cash. And that's kind of, I think, the first real example of kind of a quality asset being used as a base asset in crypto. There's a bunch of other protocols that have built on top of that to have broader distribution, some overlay option strategies to enhance yield. But that's really kind of, I think, one of the really exciting things about sitting in between TradFi world and crypto world is being able to bring in a really high quality asset with essentially no counterparty risk, perfect transparency. And then I think crypto people do what they do best and build on top of it.
Yeah, no, couldn't agree more. It's a great way to get institutions on board, and with an asset that is very familiar to them, right? But also be comfortable with the blockchain, park some money on chain, and earn a little bit of yield, and not necessarily the on ramp, off ramp all the time every time you want to do something. So I think that's great on the BUIDL product, as well as the comparables, right? Like Franklin Templeton's Benji or Wisdom Tree's money market fund. We track all three. To your point, Reed, we saw that change happen. Or at least who the leader is in terms of AUM. And we did see, a trend of, Benji tokens coming, having a few outflows and then inflows. Securitizes BUIDL with BlackRock. So really cool stuff there. I'm really curious to see in the next 6 to 12 months, what other functionality will be supported for BUIDL, the product, right? We're already seeing Ondo Finance, moving some assets over to BUIDL. Like I said, I'm curious to see what else is, going to be available.
Right. Since we're waiting for David to come back on, I'd love to get David's answer to this question too, Armando. If you could put a bookmark on that so we could come back to him when he comes on. Yeah, I wanted to just mention. Oh, okay. We got him now. We'll do the tokenize this afterward. Go ahead.
I have no idea what the question was, so my apologies. I had a technical issue there.
It's Armando's question, so he'll tell you.
What we ended up asking about is the liquidity funds. And we talked about tokenization, bringing real world assets. We talked about two things. We talked about alternatives like art. We talked about wine. We talked about other things along that line. Then we also talked about liquidity funds. So if you could touch on those 2 points for us, we'd like to hear your thoughts.
Yeah, no, absolutely. We do have a number of clients that have decided that one of the pilot things they want to do are these alternative assets. I just got back from a trip to Asia, and one of the multi-family offices there are opting to use the digital asset fund. The first thing they want to do is a tokenized whiskey issuance, which actually I've seen a number of these take place before. So this is not particularly innovative, but it's interesting that they've concluded that that's something that the high net worths will want to participate in. And that's a crucial thing to bear in mind, is they're looking at this not through the angle of how to sound cool or be innovative. They're looking at it as, what do our client base want to get exposure to? So that's something that, yeah, I completely agree with regards to that side of things. Liquidity funds, yeah, I think they are a good series of innovations, because liquidity generally as a challenge across the industry is something that we're all having to deal with. Part of the problem when you're originating assets on chain is obviously addressing the liquidity problem. So whether or not you're looking to deploy AMMs or just conventional order book markets, it's something that has to be factored into the distribution and the operation of a secondary market. So for me, that type of fund being built out to help address those types of issues is part of the maturing of the industry too. So whether it's, I think some of the examples you gave, like Franklin Templeton, you know, that they're pretty well known for being quite aggressive in this space now, and they do and are making a number of moves in this area as well. For me, it's a very powerful thing, because it gives partnership potential probably for everybody on this call in a variety of ways to work alongside them to make a success of what we're collectively doing here.
Definitely.
Yeah, thank you.
Well, yeah, that's great. You know, what I wonder, David, I'll just start with you. We'll go back down the row. Is, you know, are we going to be able to? There's a bit of a culture clash between traditional investing and you know, Web3 or crypto enthusiasts. In that there's a different kind of expectation. I mean, I don't know, lots of projects wouldn't have gotten off the ground in the past 10 years if there wasn't this huge hype cycle after all. And the hype cycle usually is predicated on these enormous gains, which are based on high risk, and lots of speculation, and people are there for it. You know, meme coins are more popular than ever after all. People are looking for that gamble and that thrill in a lot of ways. What is that process going to be like to take the crypto investor, you know, the degen, as it were, the people who have been supporting these projects for so many years, and move them over to expectations of returns that are more tethered to like something that would be reasonable and sustainable, something more indicative of traditional finance?
So I think we need to differentiate as an industry between the types of investors, for sure, within this space. I think if you look at people who are typically investing in meme coins and have 80% of their net worth tied up in them, they're really very much chasing cyclical yield to build their portfolio from relatively low numbers up to something substantive. Over a certain level, typically investors switch to a preservation and a wealth preservation mode for at least an increasing proportion of that, and they typically then would be the ones that are looking to branch out and expand into real world assets as a way of as much as anything securing and storing value, as well as obviously moderately growing it. That's really how the majority of things like the bond market used to function until it became somewhat dysfunctional now, particularly on the government side. But it was, yeah, these 3 to 5% yields might not sound very attractive to you, but if you're managing, you know, billions and billions of dollars of capital, actually it's not a bad place to park some money. The same really does apply with aspects of RWA though, because we can't sit here and use inflationary tokenomics to provide artificial yield as a way to attract that investor base. It's driven by real world economics and use cases. And so we can't sit there as an industry and just Securitize can't issue something and pretend it's got a 25, 30% yield because it's driven by the underlying asset. The same applies with ourselves. So therefore, the investors that are likely to find that attractive are fundamentally different, in my view, to the types of people we see in the crypto sector who are very much more, I would say, speculatively investing at the very least, with regards to what they're doing. So that's my general take on it. It's partly therefore a maturing of the industry, and a different group of investors in particular will be coming on board. We're finding that particularly, which is while we do have high net worths and sophisticated within crypto who've made good money. It's actually a hell of a lot of new investors coming on board through the onboarding process, and they haven't really touched crypto at all until now.
I guess I'm slightly Pollyanna in that I'm kind of hoping. I would love to hear a story in which the crypto investor learns to adjust their expectations. Is able to say to themselves, well, 2020 was a great ride, but not every year is 2020.
Do you really
think?
Do you really think that's going to happen? I think by the next cycle, whatever the equivalent of the next stage of NFTs and meme coins will have reached, we'll be doing some more of this type of thing, just in a different form, probably.
Well, except we'll all be driving Lambos by that point. That's the thing. There'll be such a glut of Lambos here in the US. What do you think, Reed? Securitize, I'm sure, has to take this dividing up of your market very seriously because of your size in the tokenization space. Where are you appealing to what you would consider to be? I don't mean degens in a pejorative kind of way. I mean, at this point, that's just another word for crypto investor, crypto enthusiast. But the retail investor versus trying to pull in usually, business from organizations or institutional business from the TradFi side. How do you speak to both audiences? And do you have to think of it in terms of productization with different kinds of appeals to different audiences in order to make that work?
Yeah, so I mean, I would kind of pick off where David left off, which is, not every investor on chain is the same. If you kind of look at the evolution of the industry, Bitcoin was kind of what you swapped into before stablecoins because it had lower volatility. Then you had stablecoins, and you could swap into stablecoins as a way to kind of exit risk. And we don't really have any yield product that isn't driven by Ponzinomics or supply and demand dynamics. So I think it's more a function of kind of the lack of options that existed, not necessarily like everyone on chain needs to be a degen because, that's what they want. I don't think there have been options that haven't had the same type of risk profile. And so if you're presented with, with a crazy yield, it's kind of difficult to differentiate okay, maybe I'm earning 5% on Aave, but I could be earning 20% over here. I don't know that many people actually do the deep diligence or appreciate kind of the interconnected risk that there is. So I'm excited for bringing on new products that are a bit away from on-chain only dynamics. And I do think we're seeing that that's resonating really well. You can look at different DAO proposals that are out there live now that Maker's been a great kind of leader in this and bringing some of these products into their treasury. There's some other proposals that are out there. So I think once the products are there, people will respond. It used to be that everyone held their whole treasury and exactly, their coin for forever, for better or worse. And that's not the case because there wasn't really an alternative.
Yeah, I couldn't agree more with both Reed and David. To David's point about different investor types. At the end of the day, distribution is the name of the game. And so when you have the degen / crypto enthusiasts that are really looking for that high yield, it's like, okay, well, let's find you some options, and potentially you could have, for example, a fund that a structured fund, but that invests into crypto can potentially get some of those yields. But then you have the other side of the coin, which is people that are a bit more sophisticated, looking to diversify portfolios, and that's where you start looking at like I said, distribution. So Securitize, you guys acquired OnRamp Invest, right, to help RIAs connect their clients to these assets along with other assets that they're investing into. We see this in Singapore as well with ADDX and working with wealth management arms of multiple institutions as well. So I'm excited to see that convergence. The other thing to think about too, though, is the large transfer of wealth that's happening right now, right? You have a lot of money coming over to younger generations, which have different risk appetites, different assets they want to invest into. Not to say that they're going to go wild and go do it on their own. They still might work with a wealth management arm of a bank, for example, but they are going to be asking, hey, how can I get some of this money, some of my portfolio into Bitcoin or into a tokenized wine fund or whatever else comes to mind. But those are the things to consider as people start, figuring out who they want to work with, who they want to integrate with, but most importantly, interoperability across chains, across asset classes. So we've done a lot in the last 6-7 years, which is a long time in crypto years, but there's still a long way to go in terms of connecting the dots here.
Right, definitely. Armando, you have a question about this as it relates to fundraising? I think it's in the document. Is it? No.
Where is it at?
It's in the document. That's okay.
Okay.
Yeah, we're just go ahead. All right, so we're just wondering.
Yeah, I can't. You cut out for a second. I apologize.
Oh, okay. Yeah, do you have the question? Or you want me to take it?
You can go ahead and take it. I can't
we'll go over
hear you well.
Oh, okay. David, can you hear me?
Yeah, you're clear for us. Don't worry. I think it must be on
right.
the end. Yeah, not to worry.
Okay, no problem. So tokenization is being, one of the things that's happening is this, the merging of the two worlds in a lot of ways, is I see more traditional Web2 businesses kind of doing their fundraising through Web3. I mean, frankly, I noticed this first in the arts with NFTs and then with tokens to a lesser degree. I ran into a lot of people who were producing movies, producing albums and other artistic endeavors using tokenized or NFT driven fundraising. Now we're looking at Web2 businesses, decidedly traditional Web2 businesses or real world businesses that are using tokenization. I know that that Chintai is working with a couple of them. Why don't you give me some examples?
Yep, certainly. I mean, really, where fundraising is concerned, it's probably worth understanding the history of different forms of fundraising for companies of a smaller scale in particular, where they've been effectively priced out of the TradFi system due to the cost of structuring and distribution, just typically requiring it to be over a certain level to be worthwhile. Now, we've seen innovations that, well, they're not really innovative anymore, but at the time they were. I think most of us here will remember crowdfunding when it really kicked in, and there were all these different platforms as a means of effectively crowdsourcing the funding process, typically right down to the retail level, and that really heralded an early boom in that side of things. But it had a number of drawbacks and flaws. So one of the most obvious ones being that there was still the challenge for retail of the lockup period for them to ever see return of the funds, and that became increasingly apparent to them after the novelty wore off. Now, if you think about how that can be represented with tokenization, you have the ability to store that effective unit of commitment, that pledge, in a form that, over time can have utility or other forms of related benefit driven to it, such that it has a secondary market value. So with that type of innovation, you're able to instantly be able to remove certain aspects related to the return of funds. In other words, you've got a secondary exit market capability, and the cost of therefore backing a company trying to raise reduces somewhat with these things. Now, the nice thing about tokenization being highly programmable is that you've got that ability to configure and experiment and try out different things where you can find, in theory, optimal solutions that work for both retail level investors right up to institutional level for this type of thing too. We're not really, by the way, directly doing anything like that ourselves, but I mention it just to give really a bit of a history related to that type of direct funding. What we are seeing, though, typically are security token offerings that we'll be carrying out with either licensed or unlicensed entities, typically leveraging our Singapore licenses, where they are looking to raise in the region of between 25 and 60 million USD as a raise size. It's varying what they're doing. In some cases, they're actually selling standard equity in the company, and in other cases, they're actually looking to do other things that relate to debt, for example, so effectively bonds, other fixed income type instruments instead. They're all looking to generally achieve the same aim, though. What we're finding, though, is that you're really going through the same level of rigor required for these as you would in TradFi. We've got an internal listing committee. You've got the same level of due diligence needing to be required. A lot of this is off chain still, so there are still what I would call friction related to this. The holy grail, I suppose, if you look at where this goes, is that eventually you've got some sort of dynamic AI listing criteria that can help with the assemblance and assessment of the information, validate it, and push straight through onto a chain where you've got everybody plugged in through even maybe a multi-protocol future and can participate and fill it in a variety of different ways. Maybe we'll all be using AI portfolio managers that personally exclusively manage and make deal flow decisions for us on our behalf, and we don't even need portfolio managers as we see them today, right? That could be eventually where all this goes if you look out that far ahead. But the reality of where we are as an industry now is that we're simply getting the efficiency benefits of moving this on chain and the ability then for buyers and sellers to connect in a much more dynamic way. That very often, by the way, takes the form of working with other partners in the ecosystem who are doing what we're doing too. So, for example, we might work with another partner to dual list on a secondary market a proportion of the secondary supply and operate two markets like we currently maybe list on New York and Singapore. We might do the primary issuance and do 50% ourselves, 50% elsewhere to leverage again multiple licenses and different investor bases. That's the type of thing we're finding is popular and is just a natural way to ensure that deal flow is successfully filling out. Maybe I got a bit off topic, but hopefully that was a bit interesting.
I think that was good. What do you think, Reed, in terms of looking for places where traditional IRL business, I keep calling them Web 2 businesses, but really more than that, I mean, Web 2 included, but also just IRL businesses, the transportation companies of the world, the municipal waste, whatever, where do you see tokenization really being a huge benefit? Like examples of it already having happened and where maybe you expect it to happen?
Yeah, so I mean, I think one of the big challenges for bringing these IRL businesses on chain, it kind of comes back down to like why bring them, and until real utility is built for them to come on chain, it's a hard sell. You can argue distribution, but if you're in the real world, like you still need to operate largely in a security context for the type of investment opportunities that you would offer. So I think I think liquidity is definitely, which I think David and Jason touched on. Liquidity doesn't exist, and the search costs are very high for a lot of these other products in the real world because you need to have a very large investment to be able to go talk to a bank, really, or a private credit fund to talk about finance. And really, are they going to spend the time to do the diligence? Probably not, unless it's a loss leader for the rest of their business. But you bring these things online, or rather on chain, and you get a lot of different eyes looking at it. You get a lot more atomization and people that are willing to take more risks and try and explore. And again, like liquidity for some of these tokenized assets doesn't necessarily need to be a security. It can take other forms that are non-securities, and that also kind of broadens distribution and access to people in geographies that otherwise wouldn't have access to the security, not because they're in OFAC, but just because there aren't great rails to connect the two. And so I think we're starting to see that happen, and the inverse as well, which is there's a lot of TradFi institutions that like securities. They understand it. They like the investor protections. They have a team of lawyers that know what to look for. But there's a lot of opportunities on chain, whether they're DeFi or not, that otherwise aren't accessible. So we're also seeing crypto natives that are looking to kind of go the inverse and use tokenization as a way, for example, to simplify in a turnkey fashion, like the basis yield, right? For basically the entire year minus the last couple weeks, the Bitcoin basis has been over 20%, and that's a market neutral trade. And compared to 4 or 5% in treasuries, that's a pretty decent difference with a different type of risk. But if you're an institution, you have to get on chain, you have to take some counterparty risk. So we're seeing DeFi natives who are tokenizing that into securities and then selling that into a crowd that is used to securities and wants exposure that way. So I think it goes both ways.
Right. It's interesting, Jason. I'm kind of combining. Go ahead, Armando. You want to take it?
Oh, I just had a quick question. This was this was really interesting. What would you guys think for these real world businesses? what criteria would make a perfect candidate to move on chain or a tokenization project?
That's a great question. Our sister company, Security Token Advisors, helps Web2 and just any business really go through the tokenization process. But a lot of what we try to figure out in the very beginning is, how big is your audience? Do you have traction? Are you a Web2 business that has a community that you can tap into, or existing investors? Because a lot of the misconception with tokenization is, let me make a token representing equity, and all of a sudden I'll have a bunch of investors lined up, and that's just not the case. So the first criteria is, do you have an investor base or a community that you can definitely tap into, at least to get some level of traction, and then attract other people to come in and invest? The other thing is, look, tokenization is not necessarily the cheapest process in the world. So, how much of assets are you really trying to tokenize, and what purpose is it for, right? I think minimum you want to tokenize maybe like $2 million at least, if not more. The sweet spot probably closer to 20 to 40 million in assets. But those are some of the tough questions that we have to ask and confront some clients with. It's like, look, maybe you're not ready for this yet. Or if you are, how do we do this the most efficient way possible? And part 3 is, okay, who are you marketing to? Are they Web3 native people that understand wallets, that understand private keys and all this good stuff? Or are they going to need a Web2 experience to still participate on chain and reap the benefits without having to do this, all onboarding and educational process? So those are some of the 3 things that I would say we kind of look into.
What do you think is a good example?
David, do you have any input?
Yeah, go ahead.
Sorry, was somebody asking me the question or not?
Yeah, Armando took that question to you.
I just asked if you have any input on it.
Yeah, well, as into what's the perfect kind of ideal client? I think it's almost better to flip it around and ask who are not the perfect clients, because actually, if you look at the potential for RWA tokenization, it's the vast majority of companies out there over time, right up to the largest financial institutions. So the ones that are not going to be perfect are frankly bad companies, or those. So to Jason's point, you're lacking a community in some form, whether it's a client base, it's a customer base, you're a non-profitable business, you're a failing business. You're not going to be able to sit there and issue and expect buyers, investors, any more than you can expect to raise through the conventional funds and systems. So that's just one thing to bear in mind here. We're not lowering the bar to quality with regards to the success of this. Although it's being opened up to a wider range and there's greater efficiencies, the standards still apply with regards to what's required. But to me, I certainly would say, if you look at it from who are the earliest adopters in this year and next, it's not the largest companies generally we're finding that are doing things with us. It's typically mid-tier companies, asset managers, smaller companies that are quite prepared to utilize this technology to fund out hotel complexes, constructions in Asia, or wanting to do things that disrupt the energy sector relating to things like carbon and hydrogen, or a variety of other things there. It's definitely an enabling technology for industry disruption of that nature as well. And that's, I think, the perfect client for this sector for now, because their needs are to do something that adds immediate efficiencies very often to existing industries where there isn't a lot, and an example of that is definitely carbon. But at the same time, they're not necessarily also bound by too many onerous rules related to securities, because obviously one of the big challenges of securities in general is the amount of regulatory restrictions around those, and therefore what kind of investor base you can match. So from an RWA perspective, I think one of the reasons we're going to see more of traction in the year ahead on those areas slightly outside of that is just purely because of those drivers. And in many ways, you could see those as the perfect early client, which sets the groundwork for further expansion as we get more inflows and adoption across other clients and right up to the biggest institutions.
And to add to or expand on David's point on utility, if you're already going to come on chain, what else could you do with it, right? Are you going to offer perks to your investors because now you know exactly who each investor is on an individual basis rather than street name? Or are you going to offer other types of liquidity? People think liquidity is just, can I buy or sell? But what about collateralized loans or other opportunities for liquidity, right? So those are all things that you might as well take advantage of course, pending, if it fits your business, but things to consider.
Definitely. Well, that's great. We're going to wrap it up just about in a minute or two. I wanted to mention, because Jason, I know that STO Markets has a show coming up, Tokenize This 2024, and you were offering our audience a discount. That's May 9th through the 11th, 2024 in Miami, Florida. Do you want to, is there anything that you want to add to that?
Yeah, look, it's we're very proud of this conference that's coming up. We're aiming for it to be the tokenization event of the year, meaning we're going to have a lot of the institutions such as the DTCC, Northern Trust, JP Morgan, Franklin Templeton show up, as well as service providers that are leading in the space, such as Securitize. Carlos Domingo will be speaking, doing a fireside chat on stage. Other great issuers. So it's a great spot to really learn about the whole industry. And the best thing is that day one is very retail, individual, investor based. Whereas day two is a lot more institutional. And then day three is a workshop, separate ticket. But yeah, we'd love for the Benzinga crowd to come on, join us. So, for 30% off tickets, just use Benzinga30 at summit.stm.co. Yeah.
So if we can get that in the chat, producers, that would be great. In the meantime, it's an outstanding panel. It was really good to meet with all of you, those of you who are new. I guess Jason and David, I knew you before. Reed, I think maybe this first time I'm meeting you. But thank you so much for coming out. Great discussion. We really appreciate all of your input. Thank you, guys.
Thank you.
Thank you very much. Pleasure.
Take care, everyone. All right, Armando, I guess we are going to move over to the BTC mining panel. I think that we're ready to go with that. Sorry, Armando's been having those camera problems, but we'll hopefully we'll get that. There you go. Oh, you just turned it off because the connection. Man, it's been that way all week for me. It's like everything that could possibly go wrong goes totally.
So this morning I got a text and it said that in my neighborhood there's an outage. In internet. No. So I had to find some place. So I ended up having to drive to my office. So that's where we're here.
Oh, is that what happened? Oh, okay. All right. Well, thank you so much for coming and helping us anyway. And thank you to everyone who's joined us today for tuning in. We're going to go ahead and take it over to the panel. I can see we did post the Tokenize This thing. We've been doing a lot of talking about the mainstreaming of crypto today. And of course, a major part of that has been the rise, the comeback of Bitcoin. And we're going to talk to a couple of people who are specifically in the Bitcoin mining business so that we can get their perspective on all of this, because this affects their business in a couple of different ways, obviously. I've got with me Armando. Armando, why don't you tell us a little bit about yourself very quickly?
So my name is Armando Pantoja. So I started out my career as a software engineer. I went to Austin State University back in the early 2000s. I got out, got into AI a little bit, and I wanted to go back to school, right? As I felt like I just wanted to learn more about computer science. So I got into, I went to University of South Florida, and I chose to study cryptology, the study of encryption in computer systems. 2009, my second year as a grad student, somebody came to me and told me about this thing called cryptocurrency. So I was in very early because I just happened to be in the right place at the right time. It was interesting to me because I was already studying security, and it was the first secure or first currency that was built on security. So it got me in early, right? So time goes on, I dabble in it for a few years, go to conferences, speak a few times, but I never really got into it deeply. 2016, there was an ICO craze. 16 and 17 after the 2016 halving. So I saw an opportunity, me with a couple of partners, we built an ICO ranker. ICO ranker at the time was the third biggest ICO site on the planet. We ranked ICOs on their potential for success. We exited that company 8 figures. A publicly traded company out of Canada bought us. At the time, it was big news. It got all over. And my social media profile started growing. And, and I always liked teaching. I was a teacher in the past when I was in grad school. So I just got to, I was able to teach online, teach people. I took a lot of that early money that we made in ICO ranker off the sale. We've invested in crypto mining operations, crypto startups, some AI projects, what we call emerging technology. I invest in cryptocurrency personally. So it's just been a great few years, and I'm excited to see what the future of cryptocurrency holds.
So you've been following Bitcoin for a long time. How cheap was it when you started?
I got transactions for $80 from Coinbase. I have one a guy back then Coinbase was more like PayPal. So I have an invoice that a guy charged me for a logo. It's 1.8 Bitcoin.
I hope it's a
And I
good
still
logo.
do the
You still use
Bitcoin.
it? Do you
It's
use that
1.8.
logo still?
I don't even use it anymore. I don't remember what the logo was for. I was going through my old transactions and I saw like 1.82 Bitcoin for a
That's
logo.
funny.
God, if he
That's
kept that,
funny.
man.
Yeah, I was told about Bitcoin by somebody in passing when it was still at a fraction of a cent, or maybe it was like 1.7 cents or something, and I didn't pay any attention. I'm always very prescient
Yeah.
with my own personal decisions. I'm a great predictor of what's going to be big because I don't pay any attention to it. Anyway, so now we're going to have some miners come on and tell us a little bit about this. So let's go ahead and bring on our guests and start that panel. Hello, Sam Tabar and Frank Holmes. Good to meet you, gentlemen. Why don't you just go ahead and quickly introduce yourselves and tell us a little bit about Bit Digital and tell us a little bit about Hive.
Sure. Frank, do you want to go first?
Oh, youth before age.
Go ahead, Sam. You're over to the left. We usually go left to right.
Okay. All right. So I'm CEO of Bit Digital. We have operations in Canada, the United States, and Iceland. We do that to diversify our jurisdictional risk, which we think is very real. I can get into that later. We also have an AI business. It's a real business, not an aspiration. What does that mean? It means that we have clients, paying clients. These margins are very lucrative. We've secured a contract for $150 million over the next 3 years. And that client has actually asked us to double the size of the fleet. So those revenues will go even much bigger than 150 million. So that's nice to have locked in, and we have those operations in Iceland. We're listed on NASDAQ. Our ticker is BTBT.
Okay, excellent. Thank you so much for being here today. How about you, Frank?
Well, Justin, I'm often on the program, especially because as a fund manager, I'm known for the world of gold. I wrote a book on gold, and quite often come on the program in the morning to talk about jets and the airline, my ETFs, etc. And in that journey, after creating Jets ETF, I tried to launch in 2017 a Bitcoin ETF and realized it wasn't going to happen. Unfortunately, it did happen just before this halving. And in that journey, I realized it wasn't going to happen. So I went and seeded the creation of the first crypto mining company to go public. And the thesis for that was the creation of something that would be green, sustainable energy, and which we've done. We're mining Ethereum and Bitcoin. We came out of the box, and then many companies followed behind that. But what's really important to recognize is that it's evolved. Like the Bitcoin ETF has changed the landscape. Many companies were in the previous cycle were not around that are around today. But I would say the biggest thing is the thought leadership at the CEO level, like having Sam here. When Hive first went out, I'm a fund manager and as a co-founder, and I run the place very lean, like you're running an ETF. And it was just a bunch of rogues came out. Today, it's first class CEOs, high caliber. So I think the crypto mining industry has evolved, and in fact, it's just the perfect timing for the Bitcoin ETFs to come out.
So when they were finally approved at the beginning of this year, was that a relief, a realization of what you've been working toward, or was it kind of frustrating because you were ahead of your time by like 6 years?
Probably both in that journey, and being regulated. I'm under a microscope at another level because I am a 40 Act issuer. So I have to sort of dance very comfortably in between what they call the public company and asset management companies.
Right. Okay, well, perfect. Let's go ahead and get on into the questions. Thank you so much for joining us today. Honestly, the halving just took place last week. I'm sure you guys probably noticed that. And obviously, it has a huge impact on miners. On the one hand, it tends to make the price of Bitcoin rise, which is good for you. On the other hand, it cuts your margin in half to start with. How is that impacting miners right now? Let's go over to Sam with that.
Yeah, I mean, it's obviously impacting greatly, and I just wonder if being a pure play Bitcoin miner is a sustainable business strategy, because when your margins are cut in half overnight, And the only thing you can do is run a much leaner operation. There's only so much fat you could take out of the machine. And if you hope that Bitcoin goes up, that's what you need to do to remain profitable. And so that becomes a challenge, because of course you can control costs, but you can't control the price of Bitcoin. And so running a business hoping that Bitcoin goes up is a challenge. And that's one of the reasons why we leveraged our skills as a Bitcoin miner. And our skills are what? There are two things. They're identifying data centers and they're procuring specialized machines. You could transfer those skills in the AI vertical, which is what we did. So, as we're doubling the size of our Bitcoin mining fleet to 6 exahash by the end of the year, we've created this entire new business line where there is no halving event. There is no halving event in AI. So we just like that position where we're immune to we're not going to try to survive by every tick of the hash rate, that we could, be profitable regardless of where Bitcoin goes. And if Bitcoin goes up, well, we're a great call option on that.
Mm-hmm.
It's a good point. Sam is going into the AI business. In the last halving, we had Ethereum mining. Ethereum mining is like very close to the AI, high margins. And as Bitcoin gets more volatile, the margins actually increase. So it weathered us right through the halving, and we made 2 substantial acquisitions at the last halving where other people had foundered in their business model because Bitcoin didn't take off. And our Ethereum just continued to grow, but it gave us an expertise in GPU mining. And I believe Sam is in Iceland, and that was our first venture, was actually in Iceland with geothermal energy as our source of green sustainable energy. But it was interesting. The GPUs chips are like driving a Porsche. When you drive Bitcoin mining machines or ASICs, it's like a Ford 150 truck. So it's a different skill set. And it's much more complex than people realize. So I've noticed that a few other people have said, we're in the AI business, we bought some 100s. They have no idea how complex and intricate it is building out for the great digital transformation, the AI. And so I laud Sam what he's able to do and get a contract and do it in Iceland. It is no doubt. We started after the Ethereum went away, of taking our NVIDIA chips, which we were fortunate enough we're allowed to do AI, and started building out our AI facilities. And that's just much more expensive. When you're in the Bitcoin mining, it's $1 million per megawatt. As soon as you go over to HPC, it's 10 million per megawatt. Big front capex. The machines are more expensive, the electrical structure around it. So with that, we're now, a year ago, we're $250,000 a quarter. We see we get up to $250,000 a month and $250,000 a week. And that's where we are in that process and that journey. And we feel by November, we'll be up to $250,000 a day in our AI business build-out model.
Mm-hmm.
Yeah,
Okay.
I mean, I should say Franken Hive is basically, I think, if not the earliest pioneer, one of the earliest pioneers in what he just talked about, especially leader in ETH mining, but certainly in the AI vertical. We actually studied Hive's moves pretty closely as we went into it.
Mm-hmm. And things have changed quite a bit. I mean, I remember back in the day when, I had friends in IT who had a server running over here, had a box that was just kind of pumping away. I remember when it could be a home industry, in other words, and it's grown well beyond that, hasn't it?
There was at one time 30 million kids estimated using their gamers and going to bed and using their parents' electricity to mine 1 Ethereum a year. And I had a paper route, and kids now we're using their GPU chips to make money creating Ethereum. And it's just sad how they went to this proof of stake from proof of work model. But I think what's really important in this sort of journey is there's no doubt there's a reset value in these data centers and owning the data centers and being in the position, because that's what Sam and I are in. We're in the data business. And you can see with AWS spending $600 million to buy 900 megawatt nuclear reactor. I mean, that's a tectonic plate shift of what's happening in this build out. So both of us are, I would say, in that lead of where we're going, and it's very, very exciting. But what happened on the weekend on the halving is also exciting. Right. We're in the ordinal market, and the ordinals exploded, and we had $1 million of unexpected revenue that wasn't supposed to be there because our revenue production was supposed to have. And so far, I think it's very exciting that the peer-to-peer Bitcoin ecosystem of plus 18,000 active nodes around the world, and the breakthrough with the ability to take a Satoshi and attach a NFT to it. That Satoshi is really important to remember. There's 100 million Satoshis to a Bitcoin, 100 million. And at 1 penny, a Bitcoin's worth $1 million. Right. So a Satoshi, 1 penny, those Satoshis that have special numbers on them that people want to attach their NFTs to get $10 to $15. So right. The idea and the concept of special numbers, special this ecosystem of Satoshis, it's easy to justify and see why Bitcoin can go to $1 million, but the ordinals is going to be key to it and other breakthroughs. And I agree with Michael Saylor saying investing in Lightning networks and ordinals is the future of adoption for the Bitcoin network.
Right.
Do you think that the spike in transaction fees is a one-off event? Do you think it's sustainable?
I think it's sustainable because other people are looking at, there's more money going into coding to create other apps and other software applications with it. And the significance of the peer-to-peer network is the best. It's better than Solana.
Mm-hmm. That's interesting. I do think the transaction fees are going to make a larger portion in the block reward, but I guess it's the we'll see what that looks like and whether that trend will continue.
We're going to need it because it's really actually an ugly business if as a business person, because the barriers to entry are nothing. Basically, the capital, and if you look at what's called the difficulty, is that today there's only 450 Bitcoin opportunities. There's a jump ball every 10 minutes. Jump, can you catch the ball? And there used to be like 1,000 people trying to jump for that ball. Now there's 10,000 since the last halving.
Can you guys hear me? I don't know if you guys can hear me. Can you guys hear me?
Yeah, let me hand the next question over to Armando. Armando, I hope those kids who use their parents' electricity to generate Ethereum held on to them.
Yeah.
I think you have the next question.
As an investor, I'm always interested in. I know electricity is one of the biggest costs in you guys' operations. So, do you guys have any specific strategies that you use to hedge against rising or even falling electricity prices, even hash rates?
Well, that's a great question. I'll jump in, Sam, because we were the first to do called balancing the grid. And we had a relationship which was still very robust and strong with Swedish utility. And with software, we can take 30 megawatts of hydroelectricity down to 1 and then back up faster than they can build another dam with turbines going up and down. And it saved them. So you then got a lot of information of that came in Texas with Riot balancing the grid. So we hedge. And there's a seasonality in Sweden, and if you don't hedge, you can get really hurt during certain months of the year when it gets cold and there's a big demand. So we're very flexible in hedging and then using the grid to turn around if we've had to sell back electricity, or we just go down for sometimes 30 seconds for the utility company, and that's sort of I think where the future is going to be. But you can't do that with HPC. You can't do that. It's 99.9% real-time uptime. And that's a big difference when you look at it. But to get $100 million in revenue, in Bitcoin mining, you need about 100 megawatts. To do that in in HPC, and Sam, correct me the number, you need 10 megawatts.
That's right. It's 90% less energy to get the same amount of revenue, to pull out the same amount of revenue compared to Bitcoin mining. It's that math you just said is exactly right.
And so all of our old NVIDIA chips, we got our money back mining Ethereum. Now we're doing the HPC. We're making today 10 cents an hour on Bitcoin mining. It's simple. It is 10 cents for S21s. And for our NVIDIA chips, we're making $1. That's 10 to 1. So if electricity is twice the price, even though you're using less, it's still a much more stable profit margin. If you have the 100s, you're getting $4 an hour. And so if you get the Blackwells coming out next year, that's now another game changer.
Yeah, I mean, that's an important data point that Frank mentioned. It takes about 100 megawatts for $100 million and about 10 megawatts for the same amount of money when you're doing AI. So the power dynamic is very different, but the uptime needs to be 99.9% in AI, unlike Bitcoin mining, where the uptime is flexible.
Just a extra question here. Do you guys, I've heard of Bitcoin miners using derivatives like, electricity futures and options to hedge against the fluctuations in electricity. You guys ever used any of those? What do you think about that?
Go ahead, Frank.
We've not gone into that process because you end up giving up. We mine green coins, and we believe they're more valuable, and we've been offered more for those green coins. When we were using our NVIDIA chips to mine what we call the shit coins and really convert them to Bitcoin, we would sell those. But the green coin, I believe they're like art. And I believe that, and we've seen this with the Satoshis with special numbers. We know that Bitcoin mined at certain dates have a greater value. And I believe that Bitcoin being mined in Iceland or Sweden, et cetera, will have over time a greater value, like Andy Warhol art. And so from that, that's just been our business model, because they always want you to pledge your coins. And then they start scrambling your coins, they mix them up. We've never participated in that. We're very conservative.
Okay, thanks for the answer.
And since you mentioned NVIDIA, I mean, that's kind of another wrinkle in all of this, right? Since 2020 with supply chain issues, I was surprised to see, I was looking up a list of the most profitable tech companies globally, and NVIDIA is right up there. I mean, they've good news for them past 4 years or so. That has had to have had an impact as well, I would imagine, just procuring the chips themselves.
Absolutely. And you can see the strategic deal they did with Core Weave. They trade at 10 times revenue. And so therefore they put in $500 million. They buy NVIDIA chips and it's worth $5 billion. It was, and it's great for Core Weave as they build out their business. It's great for NVIDIA. I think that, when you talk with the senior management NVIDIA, they're function at another level. And I had the opportunity a couple of weeks back to go to NVIDIA Week and meet with the senior management. And they're very caught up with what's called the experiencing economy. It's a epic piece of research that came out of Harvard 25 years ago, that people buy experiences. And so they're very protective of who's going to use the NVIDIA chip. Because they're not going to blame Sam or me. They're going to say it's NVIDIA's bad. And so their standard of care is truly impressive, what Jensen has done. And so I'm very, very impressed with their organization.
As of late, have you guys had any challenges acquiring GPUs?
We've not had that problem.
That was a problem 4 or 5 years ago, but I don't know if that still persists.
No, we've got getting quality, the S21 Pros, et cetera, on time. That's been more difficult, I would say, because they always promise you Bitmain, because they're competing with you. They're the biggest. I think they have 50 exahash. But when you go place an order, it's a complete different business model. It's totally different. You don't have to set up all the money, and then they don't deliver when they promise. Whereas the whole idea of buying NVIDIA chips, that you have the money when the chips are ready, you plan better, you execute better. It's a much more stable business. The real scramble is looking for safe, secure, uptime energy.
Right, definitely. I know that Armando says, I know you're on the investing side of this. Do you want to say anything? What's your hedge position around this, around the halving itself and cost versus return?
I mean, I think now it's just a wait it out right now, right? Is that 3 months? It's going to be miners who give up, sell everything. It's going to cause selling pressure on the market. I mean, for the next 3 or 4 months, invest in stocks like CleanSpark, Mirror, and Riot right now before the growth starts to happen in 3 or 4 months. Those are my strategies now. Is that right now it's just a wait and hold period, right? Is that traditionally we've had between like a 4 and 7 month period after the halving to where we start seeing those gains. So it's just right now we're just waiting to see what happens. Hopefully we don't drop too far before retail interest comes in.
Right. Definitely. I mean, and it seems like the year for a retail interest. You got ETFs now. Everyone can have exposure to Bitcoin, even without a digital wallet. To move on to the next question, which is a little bit of the side question. I feel like miners are often, even by people within the Web3 space, Bitcoin miners are often kind of misunderstood, frankly. And as you had alluded to, I think it was Sam who said so, like, everyone's having to diversify. It seems like that's going to become more of a necessity. I see a lot of miners creating, in some cases, like yield-bearing platforms, or basically, functioning as a fund in some ways. So what positive role, Sam, do you think miners can play in the crypto community this year, given that, from Satoshi's white paper on, Bitcoin mining has always been defined as positive participation in the overall ecosystem. I believe it is a good and necessary thing, but how should investors, like the retail investors out there, understand what it is that you're bringing to the party that makes a big difference?
Well, I mean, I think if you're asking in terms of why investors should be buying mining stocks, Bitcoin mining stocks, I mean, a lot of these miners right now are trading below book value, which is pretty crazy. In fact, I think some of them are even trading below, the value of their liquidity on their balance sheet. So these stocks are really beat up at this point, and the sentiment couldn't be more bearish given what happened in the halving. So I think that when retail investors are looking at these stocks, they may want to be looking at that. When you're trading at below book value, it's a no-brainer. But in terms of, I didn't quite understand the question in terms of what value are you talking about from a shareholder value perspective?
Well, not just shareholder value, but value to this overall Web3 thing that we're building. I mean, obviously, access to Bitcoin and generating more Bitcoin is a thing that investors would certainly notice if they were without. But I think that people don't appreciate the subtlety of what you're actually bringing to this overall thing we're building. Web3 itself.
Well, I don't the intersection between Bitcoin mining and Web3 is I don't have a very strong view on. Do you, Frank?
Yeah, to a certain degree. I think the question is if I'm going to go back in history, my experience in gold, and if you look when the GLD was created in 2004, by 2006 you had this separation of gold stocks versus bullion. Right. This century, bullion has outperformed the S&P by 50%, far outperformed. Gold stocks haven't, except for a handful. And the handful had the best margins, had the best discipline of revenue per share growth and cash flow per share growth. What's happened in our space is just a land grab of just getting big and selling shares to buy more equipment just to get big. And I believe what we're seeing right now is like CleanSpark trades at 8-to-1, I believe, to the ratio of what Sam and I trade at for one Bitcoin. Same good Bitcoin in production. So what you got to do is take market cap, take away the hodl position, and look at how many Bitcoin they produce per market cap, and you will see with CleanSpark and with Ride and Marathon, you are paying between 4 to 8 times more for the same Bitcoin. I believe over the next 12 to 18 months, that will change. I believe the vision for Hive is to become recognized as a data center. And now, Armando, you know why data centers are so attractive? They trade at 10 times revenue and 22 times EBITDA. There's that's the real scramble, not the scramble to go into, say, mine Bitcoin. It is the data center business. And I think the big re-rating will happen with Sam's company, and our company will saying, aha, this is the data center. This is going to do mean reversion to that norm versus just a pure Bitcoin miner. And then there'll be other people coming in after the next 2 quarters of doing the quant math that I do every day for my other funds, my ETFs. I'm a quantamentalist, and when I create my ETFs, it's very quant driven and recalibrating every quarter. So I've seen this in the gold space, and I think it's going to happen in our space. And companies like Sam's and Hive will get re-rated in that ecosystem.
Yeah, I completely agree with that. I mean, I have nothing to add because that's exactly right.
The intersection of Web3, no, I think that it's very significant. AI, we've made investments on AI generative art attached to an ordinal, a Satoshi, that has and patents on it for a gram of gold. So all of a sudden, you'd be able to move around digital art that each piece is limited to 1,000. Let's say last year was a golden rabbit. So I give you 1,000 golden rabbits. Each one is different, and each one behind it has a gram of gold. And all of a sudden, that can go anywhere in the world. And I think that that's where Web3 and the Bitcoin ecosystem is going to evolve.
I have a question.
Frank, are you friends with Peter Schiff? Given your gold buy.
I know Peter. I know Peter. He's a very smart, eclectic guy. That's bombastic and
very. Did you know that Anthony? Did you know Pomp? That's his nephew. I just recently discovered that.
They're Mishbuka? No, I didn't know that.
Yeah.
Okay. Well, that's interesting.
Sorry, Justin. Sorry.
There's a lot of theater and crypto going on with Peter Schiff, so it's actually quite relevant. And Pomp's a very pro Bitcoin guy. Schiff is a very anti Bitcoin guy.
It was so easy for me to adopt Bitcoin because of my interest and my knowledge on gold. They both read from the Old Testament of money, fiat printing, loss of property control. People don't realize that private property rights are attached to human rights. You take away private property rights, you take away human rights. And so that made it very easy to get around the Bitcoin earlier than any of my peers. I'm 69. And so when I talk to my peers, they all think I'm, smoking weed. It's like honestly, my neighborhood, a couple people said, he's crazy, this guy over here. And it's adapting to this new technology. And I think it's really significant. I think that Bitcoin is the backbone to so much that's going to evolve in property rights.
Yeah,
I have a question.
I definitely think that Bitcoin has structural upside. It's going to go through a lot of cyclical gyrations, but given the fixed supply and given the human rights issues that are currently being battered right now, everybody being taxed to the hilt and the problems with inflation, Bitcoin's really the only safe haven. And even gold, I think Frank and I have had this debate in the past. I don't think gold is really the answer anymore because people can take your gold.
Right.
Take your Bitcoin.
But since you brought it up, cannabis also a really promising area of investment. Benzinga has some shows about that. You all should look out for that, those of you viewing at home. But I think Armando has a question for us. I
have a question. So as the cryptocurrency industry is maturing, as a phenomenon that I'm seeing is that a lot of miners are opting to create funds. Is that you think it's necessary to branch out to funds to be able to grow and survive?
I think there's a business model.
Yeah, people, the pure play Bitcoin miners realize that they need to diversify a little bit. So whether it's the fund management business or AI, it's got to be something that is not completely correlated to the price of Bitcoin. Otherwise, it's difficult to run the business.
Okay.
What about you, Frank?
Well, I just think you have to be. The reality is that the cycle of new ASIC machines, they depreciate them over 4 years. We do accelerate depreciation over 2 because a new generation comes out all the time. And the difficulty, you really have to look at this difficulty of the hash rate. It's a fixed pie, and more people coming to take a piece of that pie. So you have to spend so much money in these new machines, and so it's an arms race, and whereas as a business person, you want something else that's more stable, something that's more predictable, and you're catching a secular trend. And for us, I know Sam, but we hodl as much Bitcoin because I believe it's going to be healthy on your balance sheet on mark to market. So if you look at last year, we had $60 million worth of Bitcoin, and this year it's 160 million. Well, we have 90 million shares outstanding. Our year end is March, like back of the envelope, that's $1 a share. And Michael Saylor has really fought hard to have that to go to Bitcoin to be registered mark to market. So I think that owning it on your balance sheet, it's easy to figure out. We're going to have great earnings for our year end.
Yeah, one thing we've done a little bit differently from the rest of the sector, besides this AI business, is that we have the largest stack of ETH on our balance sheet, and we stake that ETH.
The largest what, Sam?
We have Ethereum on our balance sheet. Yeah, I think in fact in NASDAQ we're the largest holders of Ethereum in all of NASDAQ in terms of public.
That's good. We used to be.
That's right. You guys used to be very like Ethereum miners. You guys had a huge vertical on that. That's right. So we do that because there's you could stake it, you can capture a yield, and we take that yield and we pour that back into our Bitcoin mining operation. So it creates this perpetual flywheel. We invented that business model. We actually like it. So it's not, if you're a Bitcoin maxi, that what I just said would be very offensive. But if you're running a business and you're trying to think creatively, that's something you probably think about.
And you've been able to manage the collateral, like that's always was the biggest risk for me, the counterparty risk, and so you're able to manage that well, Sam. Sam's a lawyer also, so he thinks this way. The counterparty risk, legal documents.
Very much. I used to work at Skadden, and I slept under a desk for 5 years. So don't remind me I used to be a lawyer.
So. Bitcoin mining, you've had a lot of action over the past 2 years. We had the big bear market and all the regulatory Gensler-related woes in 2023, them coming after, big parties and so forth and trying to, litigate to create a sort of boundaries or guidelines around the business. Of course, supply chain issues. But then at the beginning of 2024, ETFs, and now, of course, the halving itself. What do you think is really going to define this year? Are there any other big kind of black swan events that you think that, or any other big system-wide events that you think are going to define, kind of price action and the way that miners operate in 2024? Where do you think we're going to end up, Sam?
Oh, well, I think if Biden wins the election, we're going to see very, very likely a 30% tax on Bitcoin miners. That's a big problem. And that's one of the reasons why we have our operations outside the United States. We have operations in the US, but it's very important to diversify your operations outside the US, and in our case, Canada and Iceland, because if this 30% tax happens, you're going to be in a bit of trouble. So that is something that is a black swan event in my eyes.
What about you, Frank?
Well, I think, when you do global investing, you recognize this century, the synchronization of the finance ministers and you see who's ever head of the central banks. They meet many more times than the G20 leaders. They get all the publicity, but these other groups meet. And you could see at the beginning of this century, this synchronized WTO, bringing China in and using modern monetary theory to pump up the economies, and of the belief that we can just throw more money and then we'll tax it away. We'll throw more money. Each crisis, it takes about $4 to $5 more to pump the economy the next cycle. So this is a big part. And after 2008 crisis, you could see synchronized global taxation and a bit of the sort of the breakthrough, the breakdown of this growth. And you saw with under Obama with China, Trump made it and very vocal. Biden's continued that move. So the synchronization on taxation, if it was to come through with Biden, other countries would start to follow through. We are experiencing this, like British Columbia put a cap on, Manitoba, Quebec, you have to qualify. New Brunswick, we've been able to position it. Sweden, we've been in dispute of a two-tier system. In Canada, the federal tax, the IRS, doesn't recognize a data center mining Bitcoin as being a data center. So it's out. They don't have a law for that. They just do it. And we've had to wrestle with this issue in Sweden. We have tax opinions galore, etc. But it will just go through that journey. But I think the G20, these finance ministers, are very envious of the peer-to-peer Bitcoin ecosystem and how successful it's been. So first they attack all the on-ramp and off-ramp, all the exchanges. And now to go and attack the miners is to basically try to destabilize it. And I think that each time it just comes back. The last halving, there was like 11,000 nodes, active nodes around the world. Now it's just about 19,000 really active nodes. I don't know, Sam, if you have a node, we have a couple of nodes just to be validating and securing the global network. And I think that we'll just have to wrestle with it. I'll give you a classic. We found that we take MicroStrategy. Michael Saylor's done a wonderful job putting the mining group together and about their cost of energy because there was so much FUD with that. So what we found, we took those 30 minutes and made them into 3 minutes, and we had to do them in French, Spanish, English, and Swedish because we found that government bureaucrats and politicians in Sweden thought that the internet, everything was free. And we tried to explain no data center, no internet, no data center, no mobile phone. Hey, no Spotify, no Minecraft, all these games that come out of Sweden, it all ends. You need data centers. And it was like an aha moment. So I think it's incumbent upon us as the miners to be educating this sort of how we help the network and how the network can help them.
Right. Okay, well, perfect.
I believe it will create a black swan. If that happens, it will. I agree with Sam.
All right. Well, thank you so much, gentlemen. Thank you for coming on and sharing your deep understanding of these issues. We really appreciate it. Thank you, Armando, for coming on and co-hosting with me. And we hope you have a great day and you come back and see us soon.
Thank you, gentlemen.
Happy investing.
Thanks, guys. Hey there, this is Justin back with you again. Thank you so much to Armando. Are you gonna put Armando back on with me, guys? Or maybe not. All right. So thank you so much to Armando for coming and co-hosting with me. Thank you so much to everyone out there in TV land, I guess, who are watching our Benzinga show today. We very much appreciate it. Just a little reminder. Our IRL show, The Future of Digital Assets, the third annual trade show run by Benzinga, is going to be happening in New York City on November 19th. So we are beginning to post guests for that and be on the lookout for tickets. And of course, our friend from STO Market shared a discount code if you're looking to go to Tokenize This 2024. I believe that's in Florida. In the meantime, thank you, everyone. Thank you so much for joining us today. Stick with us. We will be back with more virtual trade shows and bring you more great crypto content. In the meantime, take care of yourselves. Try to take a moment to get away from your devices if you can. Don't take it too seriously. It's all just about money and technology after all. They are changing the world, but they are not everything that's actually in the world. So it's important to bear that in mind. In the meantime, thank you guys for joining us, and we will talk to you soon. All right. Peace.